This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo in attendance today as well. Sweeney on sabbatical, Gura here. Let's see who's most miserable. It took me an hour and a half to get home yesterday with the UN follies going on. How, 2-3 hours, David?
My God, you took a cab? Took an Uber?
I tried to get a cab.
Yeah.
Ubers are out of the question.
Yeah, we did a lot of circling around blocks, trying to get down one street, not able to, going down another one. It's a mess. It was a mess this morning at like 4 a.m.
It was a mess. I dined. I was going to go to the Ritz, and I didn't. So I went to wonderful Sarah Beth's.
Yeah.
Outside were 47 Chevy Suburbans all lined up for the elite.
Idling, I'm sure. Yeah.
Gura and I recovering yesterday from the plaza. Lisa, you should have been there. The china at the plaza, the coffee.
The croissant.
The croissant.
Yes.
Croissant. Yeah,
Miniature.
the croissant was great. It was... I got chastised for eating on air. It's like a federal law. You can't do that. Good morning, everyone. We're back in the saddle here, our world headquarters, with some politics. That's why Gura's here. Also, we've got some economics, finance, investment, more on China. And also a bull market is something we're going to continue with. We start strong with Virginie Maissonueve here in a moment. Let's get right to it. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures mix, and this is after the S&P 500 finished with its 41st record close this year. Right now, we'll start with NASDAQ futures. Down about 0.1%, 36 points. Dow futures, little changed, up about 26 points. S&P futures, little change, down about a point. We have the 2-year yield, 3.53%. That's little change. The yield in the 10-year, 3.76%, and that's up 3 basis points. To commodities, gold hit another record. Right now, lower at $2,655 an ounce. We have Brent crude lower, $74 a barrel. WTI crude, $71 a barrel. Shares of German software developer SAP, they're falling, down about 3% in Germany. It comes after news that it and other companies being questioned by U.S. officials for potentially conspiring to overcharge government agencies for over a decade. OpenAI, they've been busy. They're pitching the White House on the need for policies to support the development of massive data centers to develop more advanced AI models and also to compete with China. And Warren Buffett's Berkshire Hathaway sold an additional $863 million of Bank of America stock, trimming its stake to 10.5%. That's a Bloomberg Business Flash. Tom and David.
Thank you so much, Lisa. Greatly appreciate it. China is front and center. We really felt that yesterday at the plaza as well. You look at Earthshot Awards, innovation and climate and all. And David, the conversation just always gets back to China.
Yeah, we talked a lot about it, particularly in terms of pollution and what China's doing to curb that, what we know of what they're doing to curb that as well.
I read a lot about plastic yesterday. I'm pretty ignorant about the plastic tragedy, and it was very informative to do that. Now to drive the China story forward in economics, finance, and investment. Joining us right now, Virginie Maissonueve, Global CIO of Equity at Allianz as well. Virginie, I'm sure you've done this, but if you're at the restaurant Café Monsieur Dior at 30 Montagne in Paris, and you sat down with Mr. Arnault or his offspring and said, what about China? How would you brief the Arnault family now on the vibrancy and the future of China consumption?
Well, thank you. That's a great. I love the staging here. It's quite fun. Listen, I think China clearly has gone through a tough time, and when you see particularly demand in luxury good and the substitution that we start seeing within China, luxury is finding it quite tough. However, there is a lot of negative sentiment on China, and I think the packages that they've put yesterday are still underestimated by a lot of investors, particularly because of the impact it could have on domestic consumption confidence as it relates to the property market.
Do you just assume fiscal stimulus to come? We're all going Keynes today. When the facts change, Beijing changes?
Yeah, I think fiscal stimulus is needed. The current package is quite big, as you know, in terms of support to property and capital markets. But what I would like to see is an AMC for property, basically an asset management company, the same way we had, you remember, in some of the previous crises to help with the banks' NPLs. I'm not saying this is going to be announced, but what I'm saying is it would make a lot of sense as a next step. And you can see how China has timed the release of this package after the Fed cut, so that the impact on the currency versus the dollar was not too strong. And so I think we'll have more coming.
We say good morning to the Arnaud family and everyone else listening in the 8th this morning in Paris. Virginie, let me ask you just about the market reaction to all of this. And baked into these plans announced by the PBOC in China was this stock stabilization fund. Our friend John Authers, our colleague John Authers, referring to that as kind of like a Fed put, in effect. You look at how this is rippling out through Asia, not really rippling out throughout Europe and the U.S. as one might think. How do you see the market effects, the knock-on effects of what's happened in China over these last couple of days?
Yeah, so I think it's not only China. I think it's we're at an interesting point in the markets with key things in the macroeconomy, the political economy, and the financial economy. So on one hand, you have had all those announcements, and of course, positive sentiment on China has an impact on Asia, but you also have the impact of the Fed rate cuts, which of course is going to have an impact on areas that are strongly anchored around property. And you can see that with Hong Kong, for example. So I think it's the convergence of those two trends that is supporting markets.
Love to pull back and look at the United States as well. And you've written about this tension that exists between the political cycle and the economic cycle here in the United States. Where do you see most of that tension lying? Is it in terms of tax policy, tariffs policy? If we want to keep with the China theme that we're having this morning, I think a lot of people downplay the sort of role that an election might have just exclusively. But when you look at policy going forward under either of these two administrations, what stands out to you the most? What's likely to have the biggest effect?
Yeah, so I think on one hand, you have continuity. On the other hand, you have unknown, with a lot of potential announcements that, if you actually look at the announcement and the impact on finances of the country, or the pragmatic view of how you implement those, a little bit more questionable, I would say. So we would look at inflation through tariffs if we have one administration versus another. Debt sustainability has been a big topic of mine for over 12 months now. As you know, if you have continuation of the corporate tax rate cut, that's about $5-6 trillion. Right. But if you have more happening, how do we financing at the time where we're quite leveraged, and of course the cost of financing that debt is coming down, but the long end is not coming down as much, right?
Virginie, what is the cost of having too much cash in a portfolio right now into 2025? Have the facts changed, so I've got to look differently at cash, triple leveraged or not?
Yeah, so as you know, most of our clients in equities have maximum cash, generally 5%. So, but you can absolutely be at there. You're still getting some interesting returns on your cash, but I think the way to navigate that volatility is really more about a balancing. So in the developed market, having that balanced portfolios between the cyclical aspect of the stocks who might do well on those rate cuts, and a more defensive, element of the portfolio, continuing, however, to have your tech long-term stocks, right? At the same time, what you're seeing is exposure, more opportunistic exposure, perhaps in emerging markets or China. In Asia, we still like Japan. And we like China as really an area of the market that's very anti-consensus.
Virginie, thank you so much. See you at Montagne 30 there in the Dior Cafe. Virginie Maissonueve of Paris, and of course always of Allianz as well. Right to it, red and green on the screen with our news in New York City. Michael Barr.
Thank you very much, Tom. David, Lisa, Hezbollah launched a ballistic missile at Tel Aviv early today. in a further escalation after Israel carried out strikes on Lebanon that killed hundreds of people and the militants fired rockets across wider areas of northern Israel. The Israeli military said it intercepted the projectile, which set off air raid sirens in Tel Aviv and across central Israel. There were no reports of casualties or damage. Hezbollah said it targeted the headquarters of Israel's Mossad intelligence agency, which it blames for deadly attacks in which bombs were hidden in personal devices. Tropical storm Helene strengthens as hurricane warnings cover parts of Florida and Mexico. Bloomberg meteorologist Rob Carolyn has the latest.
Tropical storm Helene is located about 45 miles east-northeast of Cozumel, Mexico, moving towards the northwest at 9 miles an hour. Winds have strengthened to 65 miles an hour. Helene is forecast to become a hurricane later today as it enters the eastern Gulf of Mexico. It's going to reach some very warm waters with some ideal conditions aloft. We expect rapid strengthening before it makes landfall in Florida's Big Bend area on Thursday. It is probably going to go inland as a Category 3 hurricane, and the winds are going to be very far out from the center of circulation. It's going to be a very large hurricane, so we're expecting it to affect much of the southeastern United States Thursday into Friday, and also a wide section of the Florida Panhandle and the Florida Peninsula. I'm Rob Carolyn, Bloomberg Radio.
Rob, thank you very much. Helene comes after Tropical Storm John slammed Mexico's Pacific coast late Monday, leaving 2 dead. Vice President Kamala Harris is traveling to Pittsburgh today. Harris will outline her economic policies pushing what she calls an opportunity economy, offering financial assistance to home buyers and expanding the child tax credit. In Savannah, Georgia, former President Trump touted his economic policies that he says will bring back more manufacturing jobs to the U.S. At the center of his policies is a promise to raise tariffs on imported goods and to slash the corporate tax rate to 15%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom, David, Lisa.
Michael Barr, thanks so much. David Gura with us, of course, the host of The Big Take here. Are you going to do a big take today, or is it a 3-hour day?
Just 3. No, I will do a big take
You'll do a
after
big
the
take
show today, yes.
We'll see how that goes. When you miss something, David, you pick it up. Amy Walter, not yesterday, but 4 or 5 days ago, in the Cook Political Report on look at the trend, not the polling madness. Quote, in other words, even as Harris is gaining ground, Trump isn't losing ground. Discuss.
Holding steady, and I think that that's something obviously worrisome to the Harris campaign. That said, if you look at the other side of that coin, these numbers that show Donald Trump making some inroads in Arizona, for instance, the Harris campaign feeling confident that they are not losing ground as well. You know, I think we're at this moment where we're getting a lot of polling, trying to make sense of it. We've got, 40-something days now until the election. And I think there's a spirited debate over how much these two candidates can change voters' minds between now and the election. Mark Cuban, who's a big backer of Vice President Harris, saying that's a lot of time. She can make the case. And as Michael was just saying a moment ago, we have these two marquee speeches on the economy, both of them trying to do that at this point in the campaign.
Does she move to the middle? Is that the assumption?
I think that she is trying to do that. She's trying to stake out ground. This speech today is going to be complemented by a very lengthy economic policy proposal. We've heard a lot of folks calling for that, not the least of whom is the former president, saying, show us the beef, show us the paper. We're going to get that. Should be around 80 pages of policy today.
If the Tigers make the World Series,
looks likely,
should Vice President Harris or President Trump throw out the first ball?
If.
We're having a lot of fun with this. It's a swing state in Michigan,
it is
right?
A swing state,
the
yes.
president, it's all going to be secondary. The mighty Tigers beating the Tampas yesterday. We'll talk about that later here. So we're having a lot of fun here with the nascent Detroit Tigers, their best year since about 1947, we think. Red and green on the screen. Stay with us on YouTube. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen, and this is as investors await comments from Fed Chair Jay Powell tomorrow. Data on the Fed's preferred price metric on Friday. Today, we have a read on new home sales for August. Now, meanwhile, the MBA says U.S. mortgage rates, well, they dropped again last week, triggering this surge of refinancing to the highest level since April of 2022. The contract rate on a 30-year fixed mortgage dropped for an 8th week in a row. It's now at 6.13%. Let's head over to futures right now. We have NASDAQ futures down about 0.1%, 32 points, 20,134. We have Dow futures up about 18 points, 42,615, and S&P futures down about a point at 5,791. We have the 2-year yield 3.53%. That's little change. The yield on the 10-year 3.76%, and that's up 3 basis points. A few companies making news. Got to start with Boeing. Striking workers. They turned down the company's latest offer. They called it inadequate. Meanwhile, a top U.S. aviation official told congressional panel that Boeing will need 3 to 5 years to rebuild its safety culture. And a company survey found that a lot of factory workers, well, they still feel pressure to prioritize speed over quality. Meanwhile, Starbucks CEO Brian Niccol says he's committed to bargaining in good faith with the union that represents workers at about 500 of its stores. And Volkswagen and unions are going to start talks over cost cuts, including plans to potentially close factories in Germany. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and David.
Lisa, thanks so much. Can't say enough about Bloomberg News Now, folks. This is not, you got a podcast like Gura's The Big Take, and, it takes, do you have 14 or is it 16 people getting that puppy out the door?
I've lost count. There was
You've lost count.
Such a big staff.
Do you even know their first names, let alone their last names?
Just sir and ma'am.
Just sir and ma'am. Thank you so much, sir. Thank you. Thank you. Bloomberg News Now is outstanding. It comes out every hour, or even more so when there's huge news flow. And of course, with all that's going on in the Middle East, you'd think that. And it's just been an immediate success. Subscribe to Bloomberg News Now. Lisa will tell you how to do that. And it's just, I can't say enough about it. The Washington team's driving that bus, right?
They are. Nathan Hager with Karen Moscow too, Amy Morris,
and all that. And it's just, check it out, folks. It's more good. Gennady Goldberg is already tuned into it. Joining us now, Mr. Goldberg at TD Securities, head of U.S. rate strategy. And I just got to get back to fundamentals. And my key fundamental is the real yield is breaking down. When you look at the bet on a 30-year mortgage, the bet on what my 2-year CD is going to do, 3-year CD, how does a real yield analysis fold into that?
Over the long term, it folds into it. I think short term, it's all about nominal 10-year yields, and those have fallen pretty dramatically. And
you're saying it's going to 3.5%?
Yeah, I think it's got a little more room to go, at least this year. And that, by the way, that's assuming a soft landing, right? So if we get something a little bit different from a soft landing, something a little harder than most folks expect, then we can certainly go lower. I don't think that's the expectation at the moment, though.
We get in early. We're reading these notes. I hear an exuberant shout from Tom's desk across the building.
Notes?
I read the notes. You were reading the notes as well. This stood out to me. In our view, the debate surrounding 25 basis points versus 50 basis points this month has received too much of the spotlight, and we fear market participants may be missing the forest for the trees. Big talking point for one, Tom Keene. Explain that. What are we missing when we focus on that parlor game, as Tom calls it?
We're missing the kind of the end point, the terminal rate. That the market's already pricing in just below 3% for the terminal funds rate about a year out. Now, there's a debate about how quickly we can get there. Obviously, if we get there in 50 basis point clips, we'll get there really quick. But what is important is that that's already penciled in, and that's already starting to ease financial conditions. And if you look at any gauge of financial conditions, whether it's the Bloomberg one or any sort of alternative, not that there is one, of course.
Very good.
But, if you look at any gauge of those financial conditions, those are all showing easing. And that's the important part.
The only crystal ball gazing you do with TD Securities is at the TD ice rink up in Toronto, trying to figure out if this will be the year the Toronto Maple Leafs finally lose mediocrity. But within your crystal ball, how do you respond to the question, are rates going back to what we remember very, very, very low, or are they going back to what we remember something normal?
I think something a little bit more normal. If you're talking about nominal rates, the way I think about it is kind of a 1% R-star, and we can certainly go down the rabbit hole on that one. And on top of that, a 2% inflation target, which is, I think, certainly good in the long run, and then about 50 basis points or so of term premium. That's how I get kind of a 3.5% long run 10-year rate. That's the more normal rate. And that's, by the way, assuming nothing's going wrong, right? That's kind of a steady state. If we actually do get a harder landing, then of course we're going to go lower than that. But in the long run, that's what I kind of benchmark my forecast off of.
I want to ask how your forecasting changed as a result of what happened last week. So it's still meeting by meeting, data-driven Federal Reserve. We had this panoply of speakers yesterday from the FOMC addressing what happened, talking about the future. Now things are rolling, there's momentum. How much does that matter? Yes, both the data as we look ahead to the PCE this week. Yes, what Austin Goolsbee or Raphael Bostic is saying in Atlanta. How much of that matters? How much of this is now kind of being momentum driven?
Well, there's an old adage that tells you to forecast early and forecast often.
Yes.
I fear that we're going to be forecasting way more often, way more going forward. So, we're keeping quite flexible. I do think the Fed hasn't made up their minds, and I think that's the difficult part. What we're trying to forecast right now is a moving target, and that is extremely difficult. Not to kind of get people to sympathize with us, but that's really what we're trying to figure out. We're trying to figure out where the Fed's going to go on data that neither of us have actually seen yet.
Can I jump in quickly and just ask about communication and what we saw in the run-up to that meeting? And there's so much frustration with what was leaked or potentially leaked or what might have been amidst this swirling debate that we've had now for more than a decade about how effectively the Fed should communicate in advance of meetings and prime the market. Your sense of what happened here and what that portends about the way that this Fed communicates going forward?
It certainly could have been handled better. There's no reason Governor Waller couldn't have come out that Friday before the kind of blackout started and said, look, we don't know. It could be a 25 or a 50. We're going to go into this with an open mind. He didn't really say anything. And the market was kind of left guessing and basically saying, look, he didn't say 50, therefore it's probably not going to be 50. And that required the leak in the Journal and the FT. That's not great. That's not sort of, effective communication policy. And they're going to be much more careful about how they present this going forward.
Gennady, I got a new cause. And I think that there's all this, what are they going to do next? We don't realize how far we are from normal. If I strap, Bob Sinch taught me this. If I strap a Fibonacci from the bottom to the top, I come up with 2.9-ish is the center tendency of the Fed rate. That's 8 25 beep cuts away. We don't understand how far we are from normal. Cutting 25 or 50 is no big deal, right?
I think they've started with a good, I would say, cadence. I see the 50 basis point move as more of a catch-up than anything else.
Okay.
And then the question is, do you get there by September of next year, as we currently expect, or do you get there a heck of a lot sooner if they start going in 50 basis points?
Does a 5% unemployment rate do that?
Yes.
5 is not 4.9.
I'll put it to you this way. If the unemployment rate starts moving higher, even in 0.1s on a monthly basis, I think 50 basis point clips are on the table. And I think the Fed has made that very clear.
I know you're not on speaking terms with Mark McCormick, but what's his call on weak dollar?
I think it's tough. You've got a lot of cross currents. You've got the U.S. cutting rates, which should weaken the dollar, but you've got a lot of worries about global economics. Whether it's in Europe or Asia, it's just a question of who goes down or who kind of weakens faster. That's the issue with FX. It's all relative.
This has been brilliant. Gennady, thank you so much. Gennady Goldberg with us, head of U.S. rate strategy at TD Securities. I went up last year and saw a game.
A Leafs game.
Yeah, it was like 5 rows up, Rockstar seats. I had the Kawa seats.
Do you have to speak French when you go to those games?
No.
Toronto,
You don't.
Sorry.
You're really up to speed on this, aren't you?
Sorry, whatever. It's up there. It's north.
Good
morning, Canada.
North.
Sorry. Forgive me.
Charm offensive across the provinces of Canada. David Gura and Tom Keene, thank you so much. Gennady, thank you so much. Let me tell you about your morning commute, folks. Good morning to all of you across the nation on Apple CarPlay, on Android Auto. Good morning in the corridor, 99.1 FM Washington, our flagship, if you can find a cab in Midtown. Bloomberg 1130 AM, 92.9 in Boston, from Mount Katahdin to Block Island. Good morning, WBOS 92.9 FM. And then on YouTube, it's simple. Subscribe to Bloomberg Podcast. You too can listen to Carol Masser. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, little change, but in record territory. Traders looking for some kind of spark after last week's half-point Federal Reserve interest rate cut. NASDAQ futures down about 0.1% at 20,129. Dow futures up about 12 points, 42,609. We have S&P futures. They're down about 2 points, 5,789. The two-year yield at 3.54%. That's little change. The yield on the 10-year 3.76%, and that's up 3 basis points. To currencies, we have the dollar stronger. Japanese yen down about 0.8% at 144.42 against the dollar. The euro stronger. British pound weaker. We have Bitcoin down about 1% at 63,000. Shares of NVIDIA, they're up about 0.1%, but this is after its gains lifted U.S. equities to their latest record yesterday. Micron reports after the close. In other news, Commerce Bank, new CEO at CFO Bettina Orlopp will replace Manfred Knopf. Now, no specific date was given. Orlopp is expected to fight that possible takeover by UniCredit. And meanwhile, UniCredit CEO, said they're not seeking a board seat at Commerce Bank. And finally, sources say the head of LVMH's Sephora Beauty Paris department stores leaving the company. That is a Bloomberg Business Flash. Tom and David.
Lisa, thank you so much. Greatly appreciated. Within the narrative to the end of the year into 2025, there are people that write with blistering clarity. We protect the copyright of all of our guests. Sarah Hunt joins now. You can get her essay through Alpine Woods Capital. I can't say enough about the simple clarity of what to do. When it's this confusing and you have a rate cut sea change, do you extend your vision? Do you say, I am so uncertain, I have to look into 2026 or 27? Or do you sort of pull it in and go week to week?
I think right now, because you've got so much noise in the data and you've got so much, some of the hard data is X and some of the soft data is Y. We just saw the confidence numbers come in really weak. I think that for what we're doing right now is looking at next year, because I think that you've got some pretty good equity market run in through this year. Depending on what happens with the election, we'll see where that goes. But unless you get a sweep in one way or the other, I don't see a lot of chaos. But I think that as people start to look forward to 2025 and start writing their strategic notes and everything else, we are building in some pretty decent earnings growth, and I think that's going to be very important. So we're looking at that more than I'm going 26, 27 right now.
Talking about the soft data, talking about those confidence numbers, what stood out to you about that? There is such concern that people are beginning to, if not buckle, feel the pressure of what's been going on in the economy. How much does it concern you what we saw in that report yesterday?
Well, what was interesting to me is how optimistic some of the earlier reports were, right?
Yes.
So I don't know what's driving that difference. I know that there are a lot of issues about data collection, and I don't know if you happen to hit on a bunch of people who are feeling worried at the same time, because some of the earlier confidence data was actually surprisingly strong. So I think, again, this is one of those, what kind of long-term outlook do people really have, or are we just getting people in a snapshot and it's hard to really take away a lot from that? But the jobs expectations and being able to find a job, that was worrying.
I agree completely, and we'll talk to Dana Peterson of the Confidence Report here in just a little bit later on the show, drill down on those numbers some more. How much does the election, do you think, weigh on people just as something that's kind of a barrier to looking forward to 2025 and beyond?
It's a certainty issue, right? It's the same thing with when is the Fed going to finally start cutting? Because we know it's coming. We know the election is coming. We don't know the outcome of that. Again, if you get a full sweep of either Democrats or Republicans, I think the market has a lot more digesting to do. I think if you get divided government, yes, there are going to be some puts and takes, but I think overall that's going to be less problematic.
At a 20 multiple, 21, who's counting? But to me, it's almost bipolar. There's a lower valued contingency, and there's stuff that's way over a 20 multiple. Do you go with winners over 20, or do you try to avoid value traps, trying to find something at 17 or 16 times earnings?
Yes, because you keep some of your winners that are over 20, because some of those are the big cash-generating technology stocks that are actually doing fairly well. And you look for places where you think, okay, there's some secular tailwinds here,
Okay, let's say pretend I'm at Barron's, such as
something like a Chart Industries, Tetra Tech Industries. These are smaller cap companies, small to mid cap companies, and they are working on infrastructure and the build out that we need on the physical side of some of the stuff that we need for the technology infrastructure.
Can you talk individual stocks such as?
Chart Industries, which does a lot of LNG, Tetra Tech Technologies, which builds a lot of physical infrastructure that's going to allow you to put some of that other infrastructure in. HEICO, which provides airplane parts to an industry that is now challenged to get new planes out of the gate. Now that's one with a high multiple, but that always has a high multiple, and that's a stock that we think continues to do well in this environment.
Help me understand this moment for small caps and mid caps. I look at all the notes, and there are so many. It's a chorus of people saying this is the moment now for small caps and mid caps. Is it that? And sort of what are the prospects when you look at stocks of that size?
I think the problem for small caps and mid caps is that the narrative runs very much on what you think your economic outlook is going to be. And the minute you get a growth scare, everyone goes running out of those companies to begin with. That's where we think active management plays a role, where you're looking for companies that, again, have a secular tailwind behind them, and or something where you're thinking, okay, you know what, even if the economy slows down, I can see that there's going to be something going on here, and I think that's going to be good enough that people will look past the fact that it's got a small cap or a mid cap handle on it.
We were at the Plaza Hotel yesterday for this Earthshot Prize Summit, and we talked to a couple of people just about the prospects of AI revolutionizing more than just what's on your cell phone. I think we're still waiting for that moment when we're talking about other names besides NVIDIA or OpenAI. Are we closer to that kind of breakout moment? I think there's so much hope and promise of this. Have we seen that trickle down yet to smaller stocks?
I think you're starting to see people looking for those ancillary plays on AI because the big names are so well known and so well owned. But I think the question really is, that's a timing problem. And are we at that tipping point? And can I now expect those revenues to start to move? And I think that that's where you have that in between what's the philosophy and what's happening on the ground. And I think that people are looking for it, but I'm not sure it's quite there yet.
I love when you show up. Ball Ground, Georgia, Chart Industries is north of Atlanta, 11,000 employees, Ball Ground, Georgia. How much time do we spend on Microsoft? 98.2%. How do you find stocks like Chart Industries? Good morning, Ball Ground, Georgia.
So you look for places where you think, again, that you've got some growth coming. We like the LNG industry. They make a lot of the cooling equipment that goes into liquefying natural gas. They can also liquefy hydrogen. They have options. There's a whole lot going on in those industries. Flowserve is another company that has a lot to do with old school hydrocarbons, which I think people are finally recognizing are not going the way of the dodo anytime soon.
It's funny. We talk a lot about Microsoft. We talk a lot about the Fed as well. Has your perspective shifted? Do you feel like there is a shift underway as a result of what happened last week? I asked our last guest about this as well, just in terms of how you frame your outlook, given the fact that we're now beginning this cutting cycle.
I think so, because we were waiting for Godot for how long, right? We were baking in cuts for so long that to finally get that cycle to start. Now, the real question is, what is the cadence going to be? And I think that you can have a lot of different opinions on that, and it's really going to depend a lot on a lot of different points of data, but right now everyone's looking at the labor market, and that is the laser focus to what the Fed is going to do next.
This does feel like a Beckett play every now and then.
Yeah, I didn't read Beckett. You went to a real college. I didn't read Beckett. But Sarah, the basic idea here is we've got to figure out our vista. Now, you're hardwired 3-year vista. I get that. A lot of the industries hired 3-hour vista as well. How many poor choices is short-termism going to cost us in the new milieu?
Collectively, short-termism always costs us. And we're looking at it right now. You're looking at when you see brownouts or you see people worried about, you just restarted a nuclear facility so that Microsoft could get power. That is short-termism, right? Because that is people going, in this moment, I have to get rid of X.
This is Tom's story of the week, this Constellation Energy 3 Mile Island story.
I think
it really animates you.
Well, I'm showing my age. I mean, it was a huge deal when it was not funny.
No.
It's not funny.
Is what's interesting you about it the fact that it's kind of a catalyst for more nuclear energy broadly, or it's the answer to the AI story?
You want the real story?
Sure.
I'm in Beijing with a senior officer of a major French bank, and they're thrilled on their blah, blah, blah. They're serving me French tea. Okay, great. And all we talked about was a nuclear energy superiority of France. And how they were developing out, and every year America was falling behind, and none of us knew how we would get there, but I guess we get there from electrical generation. I mean, let's see. Sarah, this is brilliant. Don't be a stranger. Sarah Hunt with us, with Alpine Woods Capital Investors. Lisa, can you direct Sarah Hunt to the bull market exit? We have two exits here in the studio. We have a bull market exit and a bear market exit, depending on
that was elegantly done, Tom.
Well, it's all, yeah. That's the way we roll, David.
Yeah, all right.
Nice, David. You asked a question of her that you asked the guest before.
I know, I did do that. I hope nobody would notice that.
Sweeney's never done that.
I'm still hung up on the fact that you had Virginie on. You asked her, first you said you had no familiarity with plastic, which I laughed about. And then you asked her about cash at the end, and I thought that was like an amazing insight into your psychology. But no, you've got cash and plastic in your wallet, and anyway.
Yeah, you do. That's there it is, and used too often.
Forgive me for asking the same question twice. It won't happen again.
Yeah, Lisa does it all the time. We get the newspapers coming up. That'll save us. Futures at -4 with our news. Michael Barr.
Thank you very much, Tom, David, and Lisa. It is the furthest Hezbollah rocket has ever flown into Israel, 125 miles, aimed at the Mossad headquarters near Tel Aviv. It was intercepted by Israeli defenses, and Israel is continuing its strikes inside Lebanon. Secretary of State Antony Blinken, speaking with ABC News this morning, was asked directly if the situation can be contained.
I do, and it needs to be contained. We're working to prevent escalation. We're working to make sure this doesn't get into a full-scale war.
About 570 people have been killed since Israel started a massive bombardment Monday of southern Lebanon. Vice President Kamala Harris will outline a pragmatic economic vision and new initiatives to bolster domestic manufacturing in a speech today in Pittsburgh. The address will emphasize her willingness to work with business leaders to grow the overall economy, while also stressing the importance of protecting workers' wages and benefits. In Savannah, Georgia, former President Trump touted his economic policies that he says will bring back more manufacturing jobs to the U.S. At the center of his policies is a promise to raise tariffs on imported goods and to slash the corporate tax rate 15%.
You know, for years they knocked the word tariff, properly used, is a beautiful word. One of the most beautiful words I've ever heard. It's music to my ears. A lot of bad people didn't like that word, but now they're finding out I was right.
Economists say Trump's tariff proposals would increase costs for everyday Americans and affect supply. Caroline Ellison was sentenced to 24 months in prison by a federal judge for her role in the FTX collapse, despite helping prosecutors in the conviction of Sam Bankman-Fried, her former boss and boyfriend. U.S. District Judge Lewis Kaplan imposed the 2-year sentence on the 29-year-old, praising her testimony during the fraud trial. But Kaplan noted that the case was one of the most serious financial frauds ever committed, and that her cooperation can't be a get-out-of-jail-free card. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, David, Lisa.
Michael Barr, it's good. It's Stuart Lions light blue, but it's Duke week. We got Duke and UNC in football. Gura will be ensconced at He's Not Here, Chapel Hill, with the great blue cup as well. How big a deal is Duke Chapel Hill football?
Not as big as basketball, but Duke has been doing a lot better. This game is at Duke. I assume Mr. Sweeney might make his way down there to Wally Wade Stadium for the big game. But UNC coming off a bruising loss last weekend at Keene Stadium. Yes. Yeah. 70 to 50, I think, was the score. So high scoring, but boy, I mean, UNC has been flagging and Duke has been doing a lot better.
The schools are 11 miles apart.
They
right?
are. It's very close.
It's very
the rivalry is fierce. I miss it. I mean, I miss living in a town where you know that a game is being played when it's being played and everyone's in on it.
Yeah. Okay. Is this stadium at Chapel Hill like 100?
Much larger than Duke's. Duke has some charm to it, but Keene is much larger than Duke's is.
So, the Dukes are favored, you think?
It pains me to say so. And I
Duke
hope
is
springs
4-0,
eternal.
Ari?
They are 4-0. UNC 3-1.
It's a jock school.
It is a jock school, right? Yeah. Tell Paul that. Call Sweeney right now. Tell him, Paul.
Okay. Have you ever quaffed a beer at the He's Not Here?
Oh yeah, more than one.
Have you ever had a phone call to there where they said, "Does David there?" You said, "He's not here."
Yes.
Yes. Okay. Thank you. We got the dirt out this morning. Stay with us across the nation. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, it looks like the latest policy moves from China, well, they aren't rippling beyond Asian markets. Investors questioning whether those steps are going to be enough to support the country's economy. Right now, we'll take a look at Dow futures. They're a little changed, but look at the level, 42,587. NASDAQ futures down about 1/10% at 20,129. S&P futures little changed at 5,788. We have the two-year yield, 3.54%, little change. The yield on the 10-year, 3.76%. And that's up 3 basis points. To commodities, spot gold, $2,656 an ounce. We have Brent crude, $74 a barrel. WTI crude, $70 a barrel. Companies making news, that's CrowdStrike. Its senior executive for the firm, it apologized at a congressional hearing yesterday for the content update that crashed millions of computers worldwide. You remember that. And a few stocks on the move. We have Stitch Fix, down 29%. Forecast for the 2025 net revenue, adjusted EBITDA for continuing operations fell short of estimates, and General Motors down 3%. An analyst at Morgan Stanley cut the company to underweight from equal weight, also downgraded Ford and Rivian, among others. And finally, HP Enterprises up 2%, upgraded to overweight from equal weight at Barclays. That is a Bloomberg Business Flash. Tom and David.
Lisa, thanks so much. Good morning out on YouTube live chat. I've been off for 3 days. David, I got a new iPhone.
I noticed that.
And
it's
huge,
by the way.
You figure it out.
Yeah.
You figure it out. But then there's this, there's that, there's this, there's that. It's going to take me a week to get everything rehooked up again.
I was so inspired by you getting one that I ordered one last night, but not the Pro. I got the Plus, the 16 Plus.
Okay.
Am I missing out by not having the 5 cameras on the back? How many you got on there?
Cameras and the social and, I said to Redo, I need this.
You need it. What's that metal thing on the back? Oh, this is a charger.
I don't know. Redo keeper the Amex said just get it done.
Just tracking you.
But what case did you get?
Looks
That's
very
the
nice.
question.
I use only, and I tell the offspring, I'm not buying the phone unless you get a UAG case.
UAG.
They're like military grade. And yes, I dropped it last night, had the first big drop and was fine. But I'm a huge
You get the Apple Care? You get all that?
Of the what?
The Apple Care? You get all the
I do get
warranties
the
and
Apple
whatnot?
Care
Yeah.
because 4 out of 5 children, they're in bars. And, they don't ever tell me that, but that's, The worst was Riley from St. Louis.
Yes.
Had the absolute worst phone. She dropped it 5 times in a bar, all in one session.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front page is the Lisa Mateo Hour. It's brought to you by Interactive Brokers. Their portfolio analysts consolidate, analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free. PA. ibkr.com/free. PA. Lisa, what do you got?
I'm going to get you fired up because we're talking about work from home. That's right. Okay. So you remember Amazon, right? They have the new RTO policy, kicks in January, 5 days a week. They want their workers to come back. But it just so happens that they ended this popular benefit for the remote work people. Amazon gave them the option to work for up to 4 weeks fully remote from any location in the country
Anywhere.
they were hired. Yes, they were hired.
You're kidding.
So a lot of people took advantage because during the holidays, they did this because they were able to stay with families, still work from home. But now Amazon is saying immediately it is done. We're not having that either.
You lived this in a previous life. What do you think?
You're returned to office 6 days a week. We see you here haunting these halls.
I am. I'm here, we stop by Sunday.
It's funny. In my past job, I was working remote a lot, and there were certainly upsides to doing that. And I was able to travel a little bit. I think radio listeners can be a little bit unaware about where you are. That you're able to do so much now. But I did miss and do enjoy being around folks like you, Tom, and I think that is something that's
Lisa, go to the next. I'm
just getting a little saccharine. I didn't mean to get so saccharine here.
It's just too much.
He brought a tear to his eye.
Oh my God.
My work here is done.
It's too early for Tito's, right? Continue.
Tito's and Tang. Okay, the Cybertruck, right? Everybody wanted it. $100,000 truck.
Saw Tucker's the other day.
Have you seen one in the wild?
I saw one. Tucker dropped the dry cleaning off. up at Milton's on Madison Avenue.
He traded
There's
in the Hummer.
Tucker's sign. No, he kept the Hummer.
Oh, he kept the
The kids have the Hummer.
Okay.
Oh my gosh.
Well, you know what it looks like, right? It looks like this
Yes.
futuristic stainless steel. But the problem, what the Wall Street Journal says, is the owners are complaining because they can't figure out how to clean it
Yeah,
properly.
the one I
Because
saw
they're not painted, right? There's
No,
paint.
no.
The one I saw looked filthy. Full disclosure. Go.
Yeah, so there's all these online forums are going crazy. One guy said he spent like $500 on cleaning products. They're using all these different things. The Tesla does say the right way to do it is to use like a soft sponge, but they don't actually recommend that you take it to a car wash. So that's the problem that these people are having. They say don't wash it in direct sunlight. Like there's all these restrictions about how you keep it clean. So now they're saying, hey, I invested all this money in this truck and now I can invest more money to keep it clean.
Can I ask a dumb question?
Please.
Are
No.
they like so popular they can't make them fast enough?
Well, I don't know if that's true, but they're very eye-catching. Even though I hate them, I hate the way they look. But you can't help but look, and I think that's part of the thing with them.
What do they do to other cars when they bump in the night?
They're huge. I mean, these things look huge.
They don't even dent. Like
Yeah, it's stainless steel. Well, it's not stainless, evidently, but it's steel.
Right.
It's not stainless.
Alloy.
Apparently, it's
Stainless
staining.
alloy.
Okay.
I heard someone was using like baby wipes or alcohol to clean it.
Yes, or
as
Windex.
Well. Windex.
Yes.
Next.
Okay. All right, we're going to do a 2-for-1, okay? Twofer. We'll start with the White Sox, okay? You know their record, right? They're on this trajectory downward, not doing so well. So there was a whole breakdown as to why this is happening. So the plan is that they were going to tank, suffer some short-term pain, but then kind of rebuild, kind of like the Cubs did, kind of like the Houston Astros did, but it just didn't work out. The reason, the Wall Street Journal broke it down, they said the reason this is happening is because 8 years ago, you had then General Manager Rick Hahn, Vice President Kenny Williams, they started this rebuilding project, right, with the players. But they're saying the rebuilding didn't work because those players didn't amount to a championship team. They said the problem is in the executive level. They said that when they added their legend Tony La Russa as manager, they didn't ask the others for it, and they just kind of brought him in, so they didn't have a say. So they're saying that is kind of the reason. It's that executive
Is she
level.
auditioning for The Fan?
There you go, right here. 37 and 120.
Is Michael Kay listening? She sounds
37
awfully
and 120.
good.
Tom, what do you do if your record is 37 and 120?
Oh, God.
How do you rebuild
The
from that?
way you rebuild is a 4 or 5 year. Mr. Rubenstein's getting the back end of this at the Baltimore Orioles. It's 4, 5, 6 years. I don't understand the pixie dust, but it's 4, 5, 6 years, and then it's supposed to click in.
I see.
Some of that's happening right now with the Detroit Tigers, and I should point out the Tigers end the season against the Chicago White Sox, and so that's actually really germane to their future. But we'll see. Okay.
I got to talk the dreaded Red Sox.
Mina
okay?
Kimes just emailed in and said,
geez.
Lisa, you killed that. Next.
Thank you. The dreaded Red Sox, that's where we're going. They are reportedly retiring the blue alternate jerseys.
Oh, thank God.
You didn't like them.
You didn't
okay.
like it?
Oh.
Do you like the yellow jersey?
No, even worse.
Oh, but they're keeping the yellow. Okay.
Well, that's a charity
This is the
thing. I
report.
get it.
Okay, yes.
that
Okay. So
Boston's
it's the City
strong.
Connect jerseys. Yes.
Yeah.
So they're keeping the yellow, but they're going to get rid of the blue, put a new one in. They don't know what the new one's going to be. So you're going to have the regular home whites, alternate home reds, road grays, yellow jerseys, and then the new City Connect jerseys as a fifth option.
Okay.
Okay,
No
there
names
you
on the
go.
back. Thank you.
Okay.
And just the whole jersey thing. What do you
lot.
think?
You see it in the NBA as well.
I mean, I love the Padres have the military jersey because
Yes.
San Diego, it's
Fair amount of
with the
military
Navy
there.
there,
Yeah.
it's just so incredibly important. But it's sort of like in Farrow taught me in English Premier League. There's some real fails. There's some down in flames. Are you done? Are you done with
no.
baseball? You got one more?
We're done with baseball. For all you soda drinkers out there, not sure if you've tried this one, but Coca-Cola is ditching the spiced flavor.
Do you have
I
this?
hate to break the news to you, but they're ditching it. It wasn't even on the market on store
Didn't
shelves
even know
for a
it.
year.
Yeah.
So it's gone. I guess it wasn't working out too well, but Coca-Cola did say they have a new one on the horizon. They won't say what it is. But they did have the
Right.
Oreo flavor.
Oreo flavored.
flavor not too long ago. But the spice
Do you
is
let that
gone.
stuff into your house?
I do not.
No.
We don't
soda
either.
in the
I
house.
had a
don't either.
spiced. They were giving them away for free at the Barclays Center when you got off the subway, and I
And
had
how
one.
was it?
It's raspberry. It tastes like raspberry.
yes.
Yeah.
I should point out, and Mr. Bloomberg is the driver of the truck here, that
Not the Cybertruck.
he reiterated yesterday at the Earthshot Awards what sugared beverages are doing to diabetes worldwide.
Exactly.
In moderation, I think is where we would stand. Lisa Mateo, thank you for that. You know, after being at the Plaza, Lisa Mateo, they considered a wedding at the Plaza. It was $185,000. Mr. Idol was going to play.
White wedding. It's a nice day to start again.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. David Gura in for Sweeney on sabbatical, probably at Duke Week down there, UNC Duke.
Yeah.
You know, makes sense that he would go down
Tack
to
that on to a trip down there.
the festivities. Duke better than UNC this year seems to be the quick takeaway in summary. We welcome all of you across the nation on Bloomberg Radio. Good morning on Android Auto, Apple CarPlay, on the corridor from Washington to New York to Boston. Good morning. And on this new technology, YouTube. Can't say enough about it. Subscribe to Bloomberg Podcast. We're having so much fun worldwide. Good morning in Tokyo. And I really want to mention, I'm going to do it right here, right now. Paul Addison retiring from Bloomberg in Tokyo.
Wow.
End
of an era.
End of an era. 30 years with Bloomberg. He was foundational to the development of the Bloomberg way across the Pacific Rim. I walked into the Tokyo bureau, total newbie. I said, Paul, I want to learn Japanese. And Paul says to me, Tom, I've been here 12 years and I still can't order a pizza.
Suntory, you can say that, Tom.
Paul Addison and all of the Tokyo office. Congratulations, Paul, on just an incredible career in journalism. Let's get right to it from the Interactive Broker Studios, Lisa Mateo.
And we've got red on the screen, and this is after the S&P 500 finished its 41st record close this year. So right now we have NASDAQ futures down about 0.1%, but at 20,141. We have Dow futures down about 7 points at 42,590. S&P futures down about 1 point at 5,790. We have the 2-year yield 3.54%. That's little change. The yield on the 10-year 3.76%, and that's up 3 basis points. To commodities, we have spot gold hit another record. Right now it's at $2,658 an ounce. Brent crude lower, $73 a barrel. WTI crude, $70 a barrel. Shares of German software developer SAP, they're falling, down nearly 3% in Germany. And this comes after news that SAP, other companies, they're being questioned by U.S. officials for potentially conspiring to overcharge government agencies for over a decade. OpenAI, it's certainly been busy. It's been pitching the White House on the need for policies to support the development of massive data centers to develop more advanced AI models. And finally, Warren Buffett's Berkshire Hathaway sold an additional $863 million of Bank of America stock, trimming its stake to 10.5%. That's a Bloomberg Business Flash. Tom and David.
Lisa Mateo, thanks so much. Bloomberg Surveillance across the nation. Brought to you by Cohn-Resnick Advisory Assurance Tax. Is your business future ready? Talk to Cohn-Resnick's digital advisory team about strategies, about platforms to drive competitive advantage. We thank Cohn-Resnick for their support of what we do here in economics, finance, and investment. Lisa mentioned the first question there to Chris Whalen. Whalen is absolutely definitive. His one volume on the financial history is a rite of passage for people for the panic of 1907. He goes back to 1837. So when the Whalens came over on the boat. Chris Whalen joins us right now. Chris, why is Warren Buffett selling Bank of America shares?
Bank of America has done a poor job managing the duration on their balance sheet, particularly their securities. The yield on Bank of America securities portfolio is less than 3%. So if you look at the Bloomberg, look at mortgage-backed securities, look at threes, it gives you a sense for what the mark-to-market is on Brian's portfolio. But he's not the worst. Truist, PNC in my group that I follow are probably the worst.
Okay, but what about the other majors? Is it shadows around Fortress Moynihan, or can you carry that analysis over to the other major banks?
No, I think other banks are performing better. JP Morgan is killing it. They are probably 70% better in terms of
What's their best practice?
Just managing the direction of interest rates. They're paying attention.
It's Bob Michael. I'm going to tear up again. I mean,
no, but listen, it's basic banking. You can't, it's interesting in the new Basel proposal, Tom, they're going to let banks, including Brian Moynihan, write off their losses on mortgage-backed securities over 4 years. Now, who gave them this idea? The National Association of Insurance Commissioners, who did this last year because they saw that they had a problem, right? And this was all because of the Fed. So the Fed creates problems and they solve problems, and we have to try and keep ahead of them to anticipate what problem are we going to have, next week and next year.
Well, Chris, let's go there. Looking at what the Fed did last week, pushing ahead here. How do you stay a step ahead in light of what's happened? What's your sense of sort of how the terrain has shifted here as a result of what happened last week?
Well, they are signaling, I think, concern about employment, particularly. I think the Fed surprised people by going 50 basis points. There was no real debate on the FOMC. You just had a question about magnitude. Mickey Bowman dissented, but not in direction, right? So I think they're at risk of scaring people, because if you look at the credit data, there's really no recession there. So what is the Fed worried about? I would tell you maybe it's commercial real estate, which continues to fester, but interest rates is not going to fix that. That's an idiosyncratic problem. Think about it. Florida, which has been booming on the residential side, is going through one of the worst periods they've seen in decades in commercial real estate. And you would think, well, everybody's moving their headquarters to Florida, right? No. The older properties down there, the older residential properties are all going begging.
Chris, I want to ask you about the bond market in light of what the Fed has done, is doing, and just thinking about the level of fiscal firepower this country could have going forward here. We didn't hear much from the Fed chairman on this front about sort of the size and scope of that balance sheet and plans to unwind it in the coming months.
Well, they haven't. I mean, bank reserves are where they were before COVID, right after COVID. And I think it indicates just how cautious and how, really, I think, fearful the Fed is about reducing the balance sheet because of what happened in 2019 and 2020. I'm a little concerned that Powell is panicking again. I think that much like in 19, when he decided to just increase reserves dramatically, I think now they are in a position where they are so worried that there's something out there that they don't know, that they've decided to just kind of give up on inflation and put the foot down. They are increasing liquidity as we speak. So if you think that's good for inflation, then, there's not much else I can say.
Give us an update on the Chris Whalen view of commercial real estate. I once sat with Mr. Whalen with a beverage of my choice, and we looked at Midtown Manhattan towers, and he told me every story about every skyscraper there. That's his expertise. I'm looking at Triple Net Investor out on Twitter. This guy's great. Minneapolis, 633,000 square feet. It sold for $10 per square foot. Lisa, that's cheaper than Costco. $6 million off of a $74 million pre-COVID. Chris Whalen, $74 million to $6 million. Tell me when this is over.
Well, look, we have had a big change in how people use commercial real estate due to COVID, but I think also because of technology. I think of the mortgage business in 2020 when they had to send everybody home and increase headcount by 50% because of the Fed. So, what we're seeing is that people realize that the old work patterns are not going to go forward. And even if they say, well, you have to come into the office 5 days a week, right? The level of utilization for these assets has fallen dramatically. So look at New York City. If you have an A property, you can lease it at pretty much market rates. But if you're talking about older properties that haven't had the improvements, they're going to go for pennies on the dollar, Tom. And this is what's, I think, going to be weighing on the economy for the next few years. It's not a consumer upfront kind of problem, but it's definitely value destruction going on in the background, right?
What do you see Q4? We got time for one final question, Chris Whalen. Short term, which you never look at. What do you see for Q4?
I think we have another 50 basis points of rate cuts, but I think if they do that, they're going to scare everybody. They're going to make everyone believe that there's something we don't know. What don't we know?
Yeah. Chris, nobody cares. When's the book out? When's the book out?
First quarter next year. I give it to the publisher next Tuesday, and I am almost done. You're going to like it, Tom. It's a much different read than the first one.
Very good. Chris Whalen, thank you so much. Greatly appreciated. Chairman, Whalen Global Advisors. Can't say enough. I'll put it out on Twitter and LinkedIn here. His one-volume financial history is absolutely outstanding. He's got a new due coming out here in 6 months.
Chris, he'll blurb it. He doesn't have to read it. He'll send you a blurb if you need one.
Yeah, I'll send a blurb. I didn't read the book, but it's Chris Whalen. It's great. With our news in New York City, Michael Barr.
Thank you very much, Tom. David, Lisa. Hezbollah hurled dozens of projectiles into Israel, including a missile aimed at Tel Aviv that was the militant group's deepest strike yet. Today's missile firing marked a further escalation after Israeli strikes on Lebanon killed hundreds of people. The Israeli military said it intercepted the surface-to-surface missile, which set off air raid sirens in Tel Aviv and across central Israel. There were no reports of casualties or damage. Hezbollah said it fired a ballistic missile targeting the headquarters of Israel's Mossad intelligence agency. Forecasters say they expect Tropical Storm Helene in the Caribbean Sea to strengthen rapidly and become a hurricane as it moves north across the Gulf of Mexico today toward the U.S. The National Hurricane Center has issued hurricane warnings for northwestern Florida's coastline and part of Mexico's Yucatan Peninsula. This resident in Shell Point in the Big Bend region says he's taking Helene seriously and is preparing to evacuate.
I would like to still have a home here when this is over, but there's no way for me to know, and there's not much reason for me to worry.
It comes after Tropical Storm John slammed Mexico's Pacific coast late Monday, leaving 2 dead. House members plan to pass a stopgap funding bill today, avoiding an October 1st shutdown. Bloomberg's Amy Morris has the latest from Washington.
Lawmakers say they'll pass the measure even if they need a two-thirds supermajority to do it. Because the House skipped a procedural step in this process on Monday, the vote will require two-thirds of the House to support it. And they do expect it to pass. It is bipartisan, but there's still time for complaints from hardline conservatives. And that could complicate Speaker Mike Johnson's path to a full compromise funding bill in the lame duck session. Now, with a House vote today, they're aiming for speedy Senate approval by next week. And the continuing resolution funds the government through December 20th, so that means another spending showdown just days before Christmas. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, David, Lisa.
Michael Barr, thanks so much. David Gura, we've barely touched on this shutdown. Now, I assume Mr. Trump wants a shutdown. How does that affect the smaller races, the House races, the Senate races?
He wants it. There are many Republicans in the House who do not want to shut down, and I've lived this time and time again. Probably 15 or 20 of these stopgap funding bills and debates over them in Washington. And the way that this established itself was Donald Trump and others in his party were pushing for something to be tacked on to a short-term spending bill that would require proof of citizenship to vote. That didn't pass, obviously. Now we move to this kind of shorter-term bill, which Chuck Schumer, the majority leader, said was likely to happen from the get-go. We'll get this vote this week. Again, we'll kind of lunge toward this deadline. My sense is it'll all be fine for the next 3-6 months afterward. But here we go again. Regular order is a thing of the past, the way that this is done.
That's where I wanted to go. Civics 101. Are committees like Old News, the chairman of the committee, Michael Barr, will now speak on the financing of the Detroit Lions' new stadium?
It happens
Those
on
people
some
are gone.
committees. Armed Services still pretty good about this. A handful of others are, but that process where you can kind of establish what you're spending money on in a very public, have a robust debate, isn't happening the way that it was, in part because you're kind of lunging from crisis to crisis.
Let me squeeze in one more question. Are the Washington Commanders Redskins, are they for real?
Yeah, I'll go to Michael Barr on this one, yeah?
Yeah, they're for real.
They're for real.
I always defer to Michael.
I'm getting tuned up. Damian Sassar's. I'm doing better than he is. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures. This as investors await comments from Fed Chair Jay Powell tomorrow. Data on the Fed's preferred price metric on Friday. Today, to read on new home sales for August. And since we're talking housing, shares of home builder KB Home, they had a miss of earnings and net orders in the third quarter. Let's go to futures right now. NASDAQ futures down 0.1%, but at 20,136. We had Dow futures, little change, 42,595. S&P futures, little change at 5,789. We have the 2-year yield, 3.54%. That's little change. The yield on the 10-year, 3.77%, and that's up 4 basis points. Few companies making news. Boeing striking workers. They turned down the company's latest offer, calling it, quote, disrespectful. Meanwhile, Volkswagen and unions, they're going to start talks over cost cuts, including plans to potentially close factories in Germany. And in other news, FanDuel's Flutter Entertainment approves an up to $5 billion share buyback over the next 3 to 4 years. Revenue at FanDuel itself, well, it's projected to increase 14% annually. Flutter up more than 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and David.
Lisa, thanks so much. Joining us now, and if you look at his pedigree, it's absolutely extraordinary, the commitment of Enda Curran coming out of UC Ireland, Dublin, and then over to UCL in London, I believe. And David Gura, it's just unbelievable, the Asia commitment of Enda Curran. Like, I'm there like 3 weeks, and I'm like, okay, can I go home? And he has a watch from Sydney to Hong Kong of way over a decade.
He had a lease or bought real estate there, unlike you. I mean, he was there, what, a decade plus?
Huge commitment. He's now in Washington driving a huge part of our economic coverage. Enda Curran joins us this morning. And I'm going to rip up the script because you're so darn good at this. The word ballistic is in the air this morning. And it's about the 3 wars, the 2 wars, the 5 wars in the Middle East. You've lived the word ballistic out of North Korea. When you hear the word ballistic, what does that mean to you versus other forms of conflict?
Well, you know, it's funny, you saw the news overnight of the ICBM test by China, Tom, the first one in decades, speaking to the technological progress that China is making. And I think that's probably what the use of those kind of weapons and the advances in those kind of weapons speak to, the idea that the US certainly has competition now to be the global power in the way that it once was. And China launching that missile overnight speaks to the idea that no matter what the US have done in recent years to contain China's progress, they're still obviously continuing to make it. And launching that in the middle of the UN Assembly Week was sending a signal in itself.
And let's linger on what we're hearing from these 2 presidential candidates and kind of dovetail that with what you have covered for so many years. Vice President Harris making her way to Pittsburgh today for a big speech. She's going to talk about kind of targeted taxation, outline more of her economic policy proposals. Yesterday, we had the former president in Savannah, Georgia, raising the prospect of levying a 200% tariff on John Deere, the tractor manufacturer, if it were to move more of its manufacturing to Mexico and other countries. We're talking here about industrial policy from both of these candidates. And what do you make of this moment and Americans' readiness to embrace what both of these candidates are espousing?
I think it just confirms that the economy is front and center, David, in the campaign, number one. And then number two, it shows you how much of a journey that the public and policymakers have all traveled on, whereby former President Trump talking about the kind of tariff policy and industrial policy that he is hasn't really upended markets in any way or hasn't really triggered any kind of an adverse reaction. And at the same time, Vice President Harris, we probably have less specifics on her trade policy, but she's also making it clear that she's going to be looking out for the interests of workers, workers' benefits and wages, and doing what she can to stoke manufacturing at home. And all of that leads into the idea that we are in this era of industrial policy, governments putting money to look after their own, rising protectionism. And when I spoke to economists yesterday, just gauging reaction on former President Trump's ideas in particular, they're on the one hand saying, yes, of course, if you threaten tariffs and cut corporate taxes, you probably will prod companies to move to the US. But the flip side of that is your trading partners will probably retaliate and hurt US companies overseas, and there's also the inflation kind of angle there as well. But to your point, this has become a very normal discussion now. Tariffs and industrial policy is where we're at.
And Christine Lagarde of the ECB, former IMF, former French government, did the Camdesus lecture for the IMF, and it was on the blockism of the 1920s. To your point you just made, how does China respond to Trump or even Harris tariffs?
So China's been doing two things. A, it has been working on its own self-reliance. So, the harder the US has cracked down on the flow of technological know-how to China, well then the more that China has doubled down on trying to generate its own organic know-how. And clearly it's making progress. Huawei is the example of the big telecoms company that was meant to have been kneecapped a few years ago. Well, hopefully it's still continuing to make progress. We continue to see China make progress in the chip space and in the high-end technological military space, for example. So China has been doubling down on where it needs to in terms of the value chain. That's one response. And the second part of it is China continues to build its alliances around the world. It's been working the BRICS system. It has been working the so-called Global South system, building alliances, building up supply chains, working on new friendships there. And of course, it's been working on peeling off Europe where it can. You've seen that division in Europe over the tariffs on EVs, for example. So Europe policy in China isn't completely consistent. So whoever becomes president and however they do retaliate, China has a playbook.
I mean, David Gura, here's Lagarde in the Camdesus speech. I love it, from Maynard Keynes. The inhabitant of London could order by telephone, sipping his morning tea in bed, the various products of the whole earth in such quantity as he might see fit, and reasonably expect their early delivery upon his doorstep. This was normal, certain, and permanent.
I love that.
I mean, well, that's
Poetry.
the way it used to work within the Grand British Empire. That's a nostalgia everybody wants.
And you and I didn't overlap in Washington, regrettably, but when I was there, it wasn't hard to find a species of Washington creature called a deficit hawk. Are there any today as you look around Washington, D.C., as you listen to these proposals from the former president and the vice president?
They seem to be a very rare species, David. Maybe they're in the Washington, D.C. Zoo, but I haven't seen them yet. No, it's astonishing, the conversation on fiscal. As you say, there are some non-partisan agencies. There's the ratings firms. There's the Fed chairman, Jerome Powell. All of that sort of side of things have made commentary that the U.S. fiscal trajectory is unsustainable. There needs to be a course correction. Going to have to be some painful decisions. But you look at the campaign on both sides. Both are promising tax cuts. They're promising spending measures. There's no discussion around where to, rein in the deficit, so to speak. Now, former President Trump's spending gap or revenue gap is larger, according to the tallies, much larger than Vice President Harris's. But the point is, and even as the Congress are going to make that vote this week on the next spending plan, there's no real discussion here about where the pain will come.
And thank you. Great brief there, particularly there on the missile structures of Korea, China, and some of what we see in the Middle East as well. And Gura driving our economics in Washington. A little bit of red on the screen. Don't want to oversell it. Futures -2. The VIX 15.64. In the yield space, as Gura says, yields are higher, 3.77%. I'm watching the 30-year bond, 3.99%, crisis over. We're back out to 4.13%. 3.99 out to 4.13 on Gura's short-term 30-year paper. It's depressing that you think 30-year is short-term paper. Oil
relative duration here on Bloomberg Surveillance.
West Texas Intermediate back to 70.10.
Right.
Maybe we get a 69 handle there. Gold. Good morning, Dennis Gartman.
It's been a while.
I looked at gold and yen today.
Yes.
He's on the golf course.
Okay.
I looked at gold and yen today, and Gartman's just killing it. I mean, there's no other way to put it. 2,682. We're on the 2,700 watch, David, on gold.
I'd love to get him on the phone. It's been a while since I've talked to him. He's the Virginia golf courses. That's where he's hanging his hat.
Yeah, he's and he's looking at NC State football.
Sure.
And, he's busy.
Yeah.
We'll try. Make a note, Cy. We got to get Dennis Gartman on. Just get him on gold. He'll say it's going from the lower left to the upper right.
Here you go.
Get ahead of it. Sterling, I can't afford Europe. I'm going.
You are?
I'm not leaving on a train. Yeah, leaving on a jet plane and all that. Euro 111. Euro 115. We canceled the trip. Good morning, Mrs. Keene. Sorry, didn't hear that. We're out on YouTube, on live chat on YouTube. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, little change, but in record territory. Traders looking for some kind of spark after last week's half-point Federal Reserve interest rate cut. Right now, we have NASDAQ futures down about 0.1% at 20,141. Dow futures down about 10 points, 42,586. And we have S&P futures down 2 points at 5,789. The two-year yield, 3.54%. That's little change. The yield on the 10-year, 3.77%. And that's up 4 basis points. To currencies, we have the dollar weaker, Japanese yen weaker, we have euro stronger, British pound weaker, we have Bitcoin down about 0.5% at around 63,000. Shares of Nvidia up 0.5%, and this is after gains that lifted U.S. equities to their latest record yesterday. Micron, that reports after the close. And some news from Commerce Bank has a new CEO. Its CFO, Bettina Orlopp, will replace Manfred Knopf. Now, no specific date was given. Orlopp is expected to fight a possible takeover by Unicredit. And finally, sources say the head of LVMH's Sephora Beauty and Paris department stores leaving the company. That is a Bloomberg Business Flash. Tom and David.
Lisa, thanks so much. I greatly appreciate it. And now, folks, this is a really granular and incredibly important conversation. Dana Peterson joins us, just fabulous on the state of the American economy with the original insight of the Conference Board. Dana, people are trotting out 2.9%, 3% real GDP. Is that the past?
I think it may be. Certainly, in the second half of the year, we think the economy is going to slow as consumers kind of run out of steam. Certainly, we saw that retail sales in August were weak. It's going to help out for July, but certainly heading into September and into the last quarter of the year, we think consumers are going to slow down.
Tom teasing a granular conversation. I have to go there. We got these soft numbers yesterday, softer than expected. As you look below the headline numbers, what stood out to you the most from what consumers are saying about the state of this economy and their feelings about its prospects going forward?
Sure. Well, the weakness in the measure was mainly in employment. So consumers think that jobs are a little bit more difficult to get relative to easy to get. But even still, that differential is positive. It's just not as positive as it was. And looking towards the future, again, consumers are a little bit concerned about the labor market. That's really the big story from yesterday. But all in all, they're still expecting interest rates to fall. They think inflation is going to continue to cool. And for the most part, they're all working.
I guess I'll pull on something that Eliza Winger, our colleague at Bloomberg Economics, brought up yesterday, which is, what's weighing on the Fed is also weighing on consumers if you look at these numbers. And so what does that tell us? Kind of the consumer's obsession with or interest in the direction of interest rates, how much they care about where things are headed when it comes to that?
Well, absolutely, consumers looking for interest rates to fall. Anyone who's desiring to buy a home, they've been locked out by high prices and high mortgage rates. The good news is that mortgage rates already started to come off, as the Fed was signaling cuts. Now the Fed is going to cut, we think, probably another 50 basis points this year and another 125 next year. That's great for the consumer who's looking to purchase a home. And for consumers who are looking to buy those expensive, durable goods like cars, those prices are coming off. And so that's good. And so the financing is also going to be cheaper. So I think that's all great news for the consumer going forward.
What about services? We've got Tom here talking about the trip he's going to take to Europe in a couple of weeks. That is still a sign of strength. And what explains that as you look at its kind of resilience in so many recent reports?
Absolutely. And a lot of the services spending, it's kind of in two areas. One, it's on travel. Absolutely. Consumers are still willing to travel. The only problem is once they get to their destination, they can just kind of shelter in place. They don't go to the amusement park. But consumers are also spending more money on services that they need, like healthcare and insurance and those kinds of things. So there is a little bit of a rotation. So on the one hand, they'll splurge on a trip, but then they'll save on other types of services so that they can pay for car insurance.
Mrs. Keene, I've got a shelter in place. That's what you're going to say when you get to.
You got that right. But I can't even think straight with Gura here. How did Gura get booked for this? Bob, Brockton, we got to do something about this. I mean, Gura, I can't get through the
laying
show.
Traps everywhere I can.
Dana, the conference board has such a handle on the psychology and spirit of corporate America. Are corporations pulling it in? Are they afraid? Or are they investing in President Biden's manufacturing juggernaut?
Again, it depends on the corporation. So any corporation that's benefiting from, the policies, the industrial policies around infrastructure and chips and R&D and also greening are benefiting. So that's construction, that's metals, all those sectors are doing very well. Also the sectors that, are involved in consumer services, especially travel. But, it's still the case that those former pandemic darlings are still shedding jobs like, finance and tech. But on balance, businesses are just kind of holding tight. If they were planning on investing, they're doing it. If they were not going to, they're not going to. They're waiting for the election to be over and also for the cost of capital to fall. So I think, once we get into 2025, businesses will perk back up and not just spend on tech and training, but also on CapEx and structures.
Is there any anxiety about a potential recession? We started off talking about perceived softness in the labor market, concern about the job market. When you look at the responses that you're getting from both consumers and businesses, how much is that top of mind for each of those groups?
Well, we look at consumers from our consumer confidence survey.
Yeah.
We actually asked them point blank, do you expect a recession is coming? And for the most part, very few think that there is going to be a recession. And also very few think that we're actually already in a recession. And when we talk to the CEOs of the largest companies in the U.S.,
right,
they also don't think it. I mean, only 30% think a recession is possible over the next 12 to 18 months compared to 90% a year ago.
Okay, but then why are economists been so wrong on this? I got a huge group that says they've been right, no recession. CEOs got to wake up and go to work. I get that. Why is your tragic, devilish trade been so wrong, Dana Peterson?
Well, I mean, we haven't been calling for a recession for a long time. And we realize that the leading indicator, is capturing all the things in the economy that were in trouble, like manufacturing and consumer sentiment, when you average our measure with Michigan. But it doesn't account for services, and services have been very strong. Also, because it's a leading indicator, it doesn't look at the labor market. And over the last several years, businesses have not been letting people go. They've been holding on to their labor. And as long as consumers are working, they're going to spend. So that's why we don't have a recession call.
So what's your vector here off 4.2%? Not out a month, I don't care. But like spring of next year, are you talking 5-ish plus unemployment rate?
No, we only have the unemployment rate rising to maybe 4.3, 4.4%.
Wow.
So, and again, it's because when we ask CEOs, are you going to fire people? They keep saying, no, we're not going to fire anybody. We're just going to hold on to them. And again, you can't have an unemployment rate that rises unless you have lots of people getting fired. And when you look at the people who are unemployed, it's mostly people who are new to the labor market or they're returning. And it's not the case that overwhelmingly it's people who are losing their jobs. That's just not what we're experiencing right now.
Dana, thank you so much. This has been great. I'm like speechless. You want to get one more? Gura demands
Hold on, one more
Dana,
question.
Don't go away.
If
Gura
I may,
demands one more question.
If I may, I mean, we look at the...
Sweeney would never do this.
You look at the consumer data on the one hand, and if you'll forgive me, the hard data on the other. So when you look at how people are feeling and contrast that with what we're hearing,
what is
how
this?
they
What are you,
feel,
a political guy?
the passion that they have.
The big take. You go, how are you feeling?
Yes, you know.
Okay,
more
continue.
time there. You have that, but then you also have this hard data showing, look, credit card bills or credit card spending is going up. Consumers are under pressure. How do you square those two things yourself when you look at them in complement?
Sure. I mean, consumers are still complaining about prices being high, and they're also starting to talk more about interest rates and the election. But still in all, they're still running out there and spending. And we've seen this movie where over the last couple of years, they say everything's awful, but they're still going out there and engaging in the economy. So I think there definitely is, some delta between what they feel and what they actually do.
Dana, you're a trooper. Can't wait to get you back in the
Thank you,
studio
Dana.
again. We'll do 2 blocks. Dana Peterson, the conference board, with us. I really want to mention this for Global Wall Street. In about 30 minutes, maybe 40 minutes, Michael Mauboussin with us for an extended conversation, hugely anticipated by Global Wall Street. With our news in New York City, Michael Barr.
Thank you very much, Tom. David, Lisa. Hezbollah hurled dozens of projectiles into Israel, including a missile aimed at Tel Aviv that was the militant group's deepest strike yet. The Israeli military said it intercepted the surface-to-surface missile, which set off the air raid sirens in Tel Aviv and across central Israel. There were no reports of casualties or damage. Secretary of State Antony Blinken says the issues with Hezbollah have been ramping up since last year.
Israel has a very legitimate problem it has to solve. Right after the horrific events of October 7th, Hezbollah in the north from Lebanon started lobbing rockets into Israel. The people who lived in northern Israel had to flee their homes. Homes were destroyed, villages were destroyed, about 70,000 Israelis.
Secretary Blinken spoke to ABC. Ukraine's President Volodymyr Zelensky will be speaking at the United Nations today before heading to Washington to meet with President Biden and Vice President Harris later in the week. Zelensky will present a victory plan to the White House as he asks the Biden administration to take swift action to support Kyiv's campaign against Russia's invasion. Florida is under a hurricane warning as the state and Mexico brace for Helene. Bloomberg meteorologist Rob Carolyn has more on the tropical storm.
Tropical storm Helene is now about 60 miles east-northeast of Cozumel, Mexico, moving northwesterly at 9 miles an hour. Top winds are now 70 miles an hour. Helene is expected to become a hurricane later today. Hurricane warnings are in effect for the Big Bend area of Florida, much of the rest of Florida under tropical storm and hurricane warnings. And those tropical storm warnings extend up the coast as far north as South Carolina. It's going to become a very large, powerful hurricane. It will strike the Big Bend area tomorrow, but much of the Florida Peninsula and Panhandle will see winds in excess of 60 miles an hour, and also looks like some very heavy rain is likely inland over the southeastern United States as far north as the southern Appalachians into the weekend. I'm Rob Carolyn, Bloomberg Radio.
Thank you, Rob. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, Lisa.
And Michael Barr, thanks so much. Economic data here. We're coming up on a big announcement here on Friday with the PCE inflation. We'll have full coverage. Michael McKee helping us with that as he does all the time. Helping us as well are economic indicators each and every day, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors, a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. Girl, we got a crisis here. Okay, like if I'm into Detroit merch, and if I want the Alan Trammell Navy Detroit Tigers Cooperstown Collection authentic pullover, $100 large, there are no large sizes, Michael Barr. It's got to be shipped into the East Coast to Mitchell & Ness in Philadelphia. There's going to be a shipping strike.
We are days away from that coming to pass.
For real.
On the East Coast and the Gulf Coast, the international longshoremen saying that they are going to walk out on October 1st if they don't get a deal with these ports. So worrisome, yes, for you, hoping to get that baseball gear. Tom, although maybe you can talk to Mike. Maybe he has a few extras he can loan you or give
closets.
closets. But certainly we're looking to, the holidays aren't far away. And this is a big deal for that, for Christmas shopping, people buying.
How does the politics play in here? I'm going to go, I watched Marlon Brando on the waterfront, years ago. It's a Democratic story. But how does it play Trump-Harris?
We have seen this kind of dance they've been doing with unions over these last few weeks. Both candidates wanted the Teamsters to back them, the sort of International Teamsters Organization writ large to back them. That didn't happen. So they've been kind of collecting smaller branches of that union. It's an odd year for union support for presidential candidates. I think it's an odd election year as well.
Brent, out on live chat. Brent, thank you for bringing that up. That crossed my small little brain, didn't get the strike being so important. It's from Texas to what? Portland?
I think that's right,
Maine?
and it doesn't involve the West Coast ports. So we're seeing some companies rerouting stuff, but that's ginormous. And there have been problems with the Panama Canal, so it's just another thing clogging up.
Listen to you.
We did a big take about this. If you want.
Oh, did we?
Find the
Please,
podcast.
let's stop the show, Michael Barr, here right now. Panama Canal. Why are we having problems with the Panama
Drought
Canal?
Levels have been low, so there's
Really,
been a backlog
drought?
of ships
Seriously?
getting through. So they're trying to figure out how to rectify that, but they haven't been able to thus far. So there have been backups.
Can the Tesla pickup truck, the new one,
Drive through it, yeah,
can it get through
and
the Panama Canal?
clean the sides of it as it goes.
We'll have to see. Thank you for that. Seriously, folks, a strike here on the East Coast. We'll continue to follow that, mostly from our Washington bureau. Good morning, 99.1 Washington.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures, but we're in record territory. We have NASDAQ futures down about 0.1% at 20,144. Dow futures at 42,579. And we have S&P futures at 5,788. The two-year yield, 3.53%. That's little change. The yield on the 10-year, 3.76%. And that's up 2 basis points. Quick check of commodities. We have the dollar weaker. Japanese yen weaker, down 0.6% at 144.20 against the dollar. That is a Bloomberg Business Flash. Tom and David.
Thank you so much, Lisa Mateo. We say good morning, Bloomberg Surveillance nationwide. Thrilled that you're with us. One of the great moments of late September into early October, and I will go back as far as a gentleman from Iowa who supported FDR and then became a conservative Republican and moved to the center to get elected. His name was Ronald Reagan, and maybe that's a moment we are with these two candidates as they frame out who to move to the center. The governor from Connecticut is more than skilled at this discussion. We should point out that Governor Lamont's wife, Annie Lamont, serves as a board member of Bloomberg LP, the parent company of Bloomberg Radio. Ned Lamont, David Gura, knows a lot about moving to the center.
Governor Lamont, great to have you with us. And let me start here just by asking you about the speech that we're going to hear today from the Vice President in Pittsburgh, a major economic address. I was reading extracurricular this morning, looked at the Times, and Jim Tankersley talked about how outside groups are agitating for her to take a more populist position on the economy. Tom mentioning this movement to the center. What are we going to hear from the Vice President today? What do we need to hear from the Vice President? What do you want to hear from the Vice President?
Well, good morning, David and Tom. Tom, maybe I'll see you up at the Greenwich Economic Forum next month. What I want to hear is flesh out continuing the opportunity economy that she alluded to during the convention and going forward. That's a big focus on new business startups, the innovation economy. Here in Connecticut, we've started more new businesses in the last few years than ever before. And frankly, a lot of them are women and minority-owned businesses. Deal with also AI and advanced manufacturing and all the other places. It's a great time to be in the startup economy. I think that'll be our focus.
I hear the former president talking an awful lot about tariffs. He was in Savannah yesterday, talked about tariffs being a beautiful word, as he put it. There's a simplicity to him saying it over and over again. People might misapprehend what it means or what the consequences might be. Our understanding is the vice president's going to talk about targeted tax incentives today. A difficult term, I think, to sell to the American public. How does she do it? How does she convince Americans that this kind of industrial policy is going to be a benefit to them?
Look, I think tariff is another word for tax. It's a middle-class consumer tax, and you're going to be paying that in terms of higher inflation and higher costs. I think, Vice President Harris has a different strategy. Obviously, with incentives, she wants to help those small companies grow and expand, more of an ownership economy, opportunity to own your own company, and also, as you know, in housing, own your own home as well. It's good to have a stake in your community.
I want to ask you about how much time there is between now and the election. You're acutely aware of it. And there's a school of thought that it's too late in the game to change minds, that voters have made up their minds. Yes, we talk about these undecided voters, few as they are in these handful of states and districts. Are you one who believes that at this point, giving a speech like this, unveiling a plan that I gather is going to be about 80 pages long, is going to do work to do that people can still be convinced here 40 plus days till the election?
I get the idea that out of 300 million people, maybe there's 1 million that are still persuadable in 5 or 6 states. But I think Kamala Harris, you're going to see what she has in mind when it comes to manufacturing and jobs and opportunity. I think she's very entrepreneurial in that sense.
With us now, the governor of Connecticut, Ned Lamont. We welcome all of you nationwide, Bloomberg Surveillance. David?
I've got to ask you, you mentioned taxes just a moment ago in the context of tariffs being like them in your estimation. Right. Taxation front and center in your backyard, as we had the former president traveling to Connecticut to talk about the reversal of something that he did.
Governor, we got to make this granular. Okay, we got to get granular. There's a house on North Street in Greenwich, Connecticut, that if Spielberg parachuted in, he'd say, we can use this, built in 1796, actually pretty reasonable by Connecticut standards, under $3 million. David, the property tax was rounded out to $25,207. Continue.
The former president talks about restoring the SALT deduction, which was capped when he was the president and his tax bill was pushed through. Help our listeners on Global Wall Street understand the significance of that decision that he and other Republicans made back then and the import of doing away with that cap.
Well, first of all, Tom, that house you referred to in Greenwich was probably $2 million 5 years ago. It is $3 million today. A lot of people moving into the state. But you're absolutely right, David. That SALT, reducing the deduction on that was very costly to states where we invest a lot in K through 12 education. That's reflected in property taxes. So raising that deduction level, which I think is something both Kamala Harris and former President Trump have talked about, would be very meaningful up here.
Governor, Tom often talks to me about the importance of knowing history, thinking about history. As Donald Trump makes his way through Long Island into your neck of the woods, do people remember who's responsible for putting that cap in place?
I think we'll be reminding them.
As we migrate back to the speech that we're going to get today, focusing again on this industrial policy, I wonder what the end game is here for both of these candidates. I think there is a desire to bring more manufacturing to the United States from overseas. We remember thinking again about history, about how much was made in this country before. We're not going to get back to that. Are we? I mean, what's the dream? What's the vision that your candidate has, that politicians have for a sort of renaissance or resurgence of manufacturing in the United States? What does it look like?
I can tell you in the last 6 years, we brought more manufacturing back to the state of Connecticut. We have a lower unemployment rate than the national average. That was not true for much of the generation. I think some of that is related to the fact that advanced manufacturing is very capital intensive, requires high level computer skills. If you go to some of these places, we're making jet engines and submarines. And I think that all plays to our strengths.
Ned Lamont, tell me about the fancy people. And you've had the class to stay in Connecticut. Frankly, you could do whatever you want. You've done the political game, which is fine. Those fancy people moving to Florida, what's the mistake they're making? I mean, there's a exodus from Connecticut of fancy people to Florida. Discuss that impact.
The good news, Tom, is we have more young people moving into the state of Connecticut than ever before, more young people staying in the state of Connecticut. But you're absolutely right. You know, going back even before we had an income tax, a lot of older folks and wealthy folks did go down to Florida. Hope Sound was created back in the 50s by that crowd.
Right.
Look, I think Florida's a great place to visit. Wouldn't want to live there.
I want to talk to you about a tough topic. We talked to an elite audience here at Bloomberg, but Governor Lamont, it's just simple. People in the, you look at a more challenging part of Connecticut like Bridgeport, they're not worried about Jupiter Island or Hope Sound. They're worried about drugs right now. What do you need from Washington to help this nation with our drug crisis of fentanyl?
The good news is the fentanyl crisis is receding a little bit. We're using some federal resources, a lot by the state, doing a lot more in terms of intervention early on, taking care, Narcan in the schools, doing everything we can there. But I'm a big believer in opportunity. When young people see there's opportunity there, they have a better alternative. That's why free workforce training, we guarantee you a job if you pass with those skills. I think that's a big part of the answer too, Tom.
Governor, we've been talking an awful lot about polls these last few days, and there have been plenty of them. You've seen them, I'm sure. And what seems to be bubbling up to the top is this interest in, passion for getting the economy to be in better shape. That's what voters care about. As you make your rounds through Connecticut, what are voters telling you the problems are when it comes to the economy and what needs to change? How much are they looking to Washington to affect that change?
As I go around the state of Connecticut, I think people feel like we're in a pretty good place from an economic point of view, but affordability is an enormous issue. Everything from grocery and right now electric rates going up. Electric is a big deal for us because demand is going up through the roof. Look at data centers, and yet supply is still tough. We're at the end of the supply chain here. So that's what I hear is affordability.
Governor, I got time for one more question. It's the only one that matters. What can the governor of Connecticut do about Amtrak and the wires in the heat of August popping up from New York to Boston?
I thought you were going to ask about I-95. But
I mean, we're not going to blame this on the state of Connecticut.
Okay.
Ned Lamont, they're doing better after the tunnels in New York. They're doing better to Washington. What can we do about Amtrak in Connecticut?
I think thanks to the infrastructure bill, Tom, you're going to see a big difference there. Amtrak Joe kind of cared a lot about Amtrak. And that means everything from straightening out the rail where we can so you can get higher speeds.
Right.
You know, one of these 100-year-old bridges, Tom, costs us about 2 minutes because you got to slow down and then speed up on the backside of it. So I think you'll see some real progress there, but it's probably going to take a decade.
I got a time, like a minute here. This is really important, Ned Lamont. President Biden speaking to the UN yesterday. We were thrilled he stopped by Bloomberg Philanthropies as well. What will be the Joe Biden legacy? You talk about Amtrak Joe. I think he's comfortable with that. But after the hellacious 6 months this president has had, what will be his Democratic Party legacy?
Builder. I think everybody, since I've been around for a while, says we're going to start rebuilding America. I think he did that. Look where we were 4 years ago with sagebrush blowing down empty streets. And now what you're going to see in terms of roads and bridges and good paying jobs and speeding up Amtrak for you, I think that'll be a big piece of his legacy.
Ned Lamont, thank you so much. The governor of Connecticut with us this morning. David Gura, thank you so much for that conversation. Just really outstanding. I find it amazing the federal to state tension nationwide. we need the Fed's money, Amtrak, whatever, but we really don't like the Fed. I mean, that's basically the theme, state to state.
That's the theme, and a huge challenge for these candidates, particularly for Vice President Harris. We've talked a lot about the infrastructure investments that have been taking place across this country, not just in blue districts, but red districts as well, conveying the fact that that money is supporting business, leading to more investment. And I think it's incumbent upon this candidate to kind of make that case in the speech today, and as she goes ahead to the election, we'll see if she doesn't.
Well, thank you for listening across the nation today. Bloomberg Surveillance brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. That at IBKR.com/RIA. IBKR.com/RIA. And we thank them for their support.
You're very excited about this next hour.
This is Michael Mauboussin. Thank you for bringing that up. Folks, I'll do it right now. Rich, how much time do I have here? 1 minute. Thank you. Perfect. Thank you for that, Si. Mauboussin started publishing in 97-ish for Credit Suisse. And right from the beginning, Wall Street basically stopped to read 7, 8, 10 pages on the theory of capital allocation and capital deployment. He owns the high ground on this. We've got Michael Mauboussin coming up for a generous half hour here in the next hour. Futures at -2, the VIX 15.61, Stones.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Sweeney, Duke UNC. He'll be there. I guess that's where he is. David Gura, though, yeoman's duty here. That was a great conversation with Governor Lamont.
Yes, and wide-ranging, and I think a nice prelude to the speech that we're going to get today from the Vice President, and sort of a summation of what we heard from the former president. Both of them talking about the economy, trying to talk more about the economy, focusing on the economy this week on the campaign.
At the VP debate, does Walz, does Vance, do they move to the center?
This is your main question. How much magnetism there is in the center.
I'm not used to where we're 40 days away, right?
Yeah, I think that's
feel
the
like
tendency.
we're 100 days away.
That's what's happened historically. So I think that we're gonna see that certainly from Mr. Walz. I'm not sure about Mr. Vance.
Markets here churning this morning, flat. I'm going to call it after the theatrics of 50 basis points. The VIX 15.60. What do I do, folks? I look at the yield space. I look at the Sweeney yield, 3.53% in the 2-year. And the real yield, I'm sorry, this is just something, 1.58%. If that was to break down lower, that would be a big deal. We're not there yet. I'm watching American oil, $70.20. Maybe we get a 69 print again. And then, of course, on dollar, churning weaker. Yen 144.15. Francine Lacroix with the Prime Minister of Japan the other day was something to see.
Yes.
As they have a lot of challenges.
She's still here?
I don't know her people. I asked her.
It was good to see her from a remove. We had a
remove.
photo op. You and I had a short photo op with her yesterday.
Yeah, but that's all they'd allow us. I tried to have her sit down and talk to us, but they said she's too busy.
Too many prime ministers.
In this hour, folks, for Global Wall Street, Michael Mauboussin will join us. We're thrilled with that. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures pretty much treading water after the S&P 500 hit its 41st record close this year. We'll start with NASDAQ futures, down about 0.1%, but at 20,144. Dow futures, little changed at 42,570, and S&P futures, little changed at 5,700. 589. We have the 2-year yield at 3.52%. That's down 1 basis point. And the 10-year yield, 3.76%. That's up 2 basis points. To commodities, gold hit another record right now. Spot gold higher at $2,660 an ounce. Brent crude lower, $73 a barrel. WTI crude, $70 a barrel. Shares of German software developer SAP, they're falling, down nearly 3% in Germany. And this comes after SAP, other companies, they're being questioned by U.S. officials for potentially conspiring to overcharge government agencies for over a decade. Other stocks on the move. Let's hit online retailer Stitch Fix, down 27%. Forecast for 2025 net revenue, adjusted EBITDA for continuing operations fell short of estimates. And finally, DoorDash. Oh, that's a sensitive spot in the Mateo household. Up 2%, an upgrade from KeyBank Capital Markets to overweight from sector weight.
I did a text on my new phone last night. I said, would everybody just stop?
Yes. This was an argument yesterday. The continuous DoorDash.
Sweeney just took the card away from the kids.
Yes.
We need that Irish toughness of Sweeney. It's out of control, Lisa.
It's out of control.
It's like moving the needle on GDP.
I know. I cut it off. It came back somehow.
You know what they do? She orders McDonald's for breakfast.
Like a McGriddle?
And she orders me. Two of the,
that's very nice.
You're laughing, Nisha. Lisa, that's they order me some of the food.
That's very nice. That's
Nisha
very
thinks this is hilarious.
She's thinking.
Lisa, go away. It's time for Nisha. Okay, if you're in fixed income, this is flat out the most important thing of the day about what do you do if you got a pot of money and you got trusts, mutual funds, ETFs in this, and there's this thing called a separately managed account. Nisha Patel owns the absolute high ground on this. She worked for Marty Sass a few years ago. She's like 12 years old when she was doing that. She joins us today. Let's start. What's a separately managed account?
What is it? I was going to ask the dumb question.
Yes. So separately managed accounts are customized, individualized accounts for clients where the client is holding the end securities. And you can customize it based upon, asset class exposure. It provides more tax efficiency. So remember, you have an evolution from mutual funds to ETFs, right? And ETFs have been more tax efficient. That's been kind of the name of the game. Typically lower fees. Investors who are just looking for beta, ETFs are a great way to do that. SMAs have basically been the evolution from ETFs.
This is out of Parametric, and to Eaton Vance's immense credit, now with Morgan Stanley, they're the ones that piece this together. Come on, this is old school back to Marty Sass.
Yes.
I'm going to own the individual piece of paper.
Correct.
How much yield loss do I take putting a piece into my portfolio, my SMA, because I'm not buying it from Fidelity?
Well, look, you're not taking any yield loss, really, right? So it really depends on the asset class. And over many years, you've seen such a efficiency in terms of trading take place in certain markets that if we're just putting, let's say, $25,000 in your account, you're getting the same pricing benefit as you.
Stop
and think about this, right? At Parametric, we manage over $80 billion in separately managed accounts.
So you're buying size.
We're buying size, but I'll tell you this. In certain markets like municipal bonds, corporate bonds, secondary trading and electronic trading has changed the game. So you can buy very cheap odd lots, right, that you can leverage and buy that all day long. And that is just a phenomenal way to add value.
I can't say enough, folks, how important this discussion is. We're all living in a time and place where, like Pim Fox had the Blue Book, the Standard & Poor's Bond Blue Book.
Yes.
He'd be looking at Boise Cascade, and you knew he couldn't compete against Eaton Vance or Fidelity. You're buying wholesale muni bonds.
Correct.
Allocating them out to SMAs.
Correct.
So your clients aren't getting taken to the cleaners.
Exactly.
Versus a BlackRock ETF.
You're getting the same pricing. And then I would argue most ETFs are only working with a few counterparties. So typically, they could be price takers. We are working with every single counterparty. So you see all the secondary offerings, and you see every new issue deal in the market.
taking notes.
I am taking notes.
So listen, let's chat later about your muni account. And I'm going to just add, I think, look, munis, municipal bonds, and I leverage. We have roughly about $60 billion in municipal bonds, separately managed accounts. So big focus for us. And typically munis, operate at a snail pace in terms of technology adaptation. We've seen massive strides in that market. And so when I talk about secondary offerings, on any given day, 80, 90,000 different offerings out there in the market. We're leveraging AI, machine learning, to tell us, hey, these offerings are cheap, you should buy these.
This is not like Doug Cass as a kid or Peabody years ago, and he's going to buy a muni, and it's got what's called a field goal in it, which is 3 percentage points to the dealer.
Right.
That's a field goal.
Yes.
Those days are gone?
Those days are gone.
Okay.
And look, the other value we provide, we talked about credit. You had a great conversation with Governor Lamont just earlier.
We did okay?
You did fabulous. You talked about state finances, right? You're looking for more money for the railways and improve, municipal bonds are essentially financing infrastructure. But as any other market in a slowdown period, credit research is so important. So, Tom, those days of just going out and buying insured AAA bonds, it's not that easy to do anymore. You need someone to be doing their
homework. You mean taking advantage of tax-free bonds? David, save us here.
As I take notes and as we move away from the SMAs, just to munis themselves.
Yes.
How is that market doing?
Yes.
Look at this inflection point of last week.
Yes, of course. So look, I think munis have lagged the performance of most other fixed income classes this year. And, broadly speaking, your Bloomberg Muni Index is maybe up about 2%. Compare that to Treasuries up over 4, IG Corporate 6, high yield munis even as close as 7. The reason for that is that we've just seen a record amount of supply in the market in a short period of time. And look, like most other markets, especially look in corporates too, IG corporate space, we've been seeing a lot of issuance. They want to get ahead of any volatility. So we've seen about 100 billion more in issuance. It's created pressure. In the intermediate to long term, muni yields are higher as Treasury yields have come down. So that ratio is very cheap today, and tax-exempt yields are in the 4 to north of 6% camp.
20 seconds. Bar's got to sit down. Nisha Patel, simple. What's a minimum amount of money is efficacious to have a separately managed account? Don't give me 25,000. Give me the real number.
You can 150,000.
150,000.
150,000.
You can get it done.
And listen, that's going to continue to go down. So we'll chat later. I have the paperwork ready for you, Tom.
And a pen. Look at that.
Nisha Patel, thank you so much.
Go
here. Order DoorDash.
I love
it. Do better. With Parametric and, of course, the heroes at Eaton Vance. Nisha Patel with us this morning. Folks, we'll have her back. This is a hugely important issue. This I can only buy from an Eric Balchunas ETF. You have to get up because Bar has to sit down.
He's in the back.
I'm sorry. Nisha, thank you. Nisha, thank you so much. Yeah, remember, if you order McDonald's this morning, Nisha, I get a, sausage
like
McMuffin. That's how I do it. You want to tell Redo, keeper of the Amex. Futures negative on the VIX, 15.59. I'm looking at gold, up $11. We are on a 2,700 watch. Wow, 26.88. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, Lisa. Israel stepped up its heaviest air attacks on Hezbollah targets in Lebanon since 2006 after shooting down the first missile ever fired by the militant group at Tel Aviv. Hezbollah said it was aiming for the headquarters of Mossad, Israel's external intelligence agency. We get more with Bloomberg's Ethan Bronner.
Israel's continuing to strike pretty widely in South Lebanon and the Bekaa Valley east of Beirut, and some 40 projectiles have come at Israel from Lebanon. So there continues to be a fair amount of activity on both sides.
Bloomberg's Ethan Bronner. Around 570 people have been killed since Israel started a massive bombardment of southern Lebanon on Monday. Israel broadened its targets today, striking a town north of Beirut. Forecasters say they expect Tropical Storm Helene in the Caribbean Sea to strengthen rapidly and become a hurricane as it moves north across the Gulf of Mexico toward the U.S. The National Hurricane Center has issued hurricane warnings for northwestern Florida's coastline and part of Mexico's Yucatan Peninsula. It is projected to hit Florida's Big Bend region tomorrow. This man has been helping his neighbors in Shell Point prepare to evacuate.
Everybody's pretty much taking this seriously.
Helene is forecast to be near hurricane strength when it passes near the Yucatan Peninsula before becoming a hurricane later today. In baseball, the Yankees lost to the Orioles 5-3. New York can still win the AL East with a victory tonight. Baltimore clinched a playoff berth. The Mets lost to the Braves but still hold the second wild card spot. And Tom Keene said, "You got to talk more about the Tigers." And I said, "Coach, I like your thinking." The Tigers are on a magical run, and they are in the thick of the race for the first MLB playoff appearance since 10 years ago. Since August 11th, the Tigers 28-11.
They didn't get Yankees-Dodgers at the back end. They got Tampa Bay White Sox.
Yeah, well, yeah, that's the
So
5 games left.
Everything's lined up here for them to have. They're the best team since August 11th.
The odds of us making the playoffs before this run, 0.2%.
I looked in the dugout, and 72% of the dugout can't buy a drink. That's how young they are.
This is amazing. This is one of those baseball stories in Detroit folklore that's going to last forever.
Is the Domino's son, Mr. Ilitch, died? Is he like an active owner?
Yeah, no. I mean, I don't mean that in a negative way. It's just that, you have the manager does his thing. So.
Michael Barth, thank you for that Tigers focus. Whose idea was this, Rich? I mean, come on.
It was yours, Tom.
You say good morning on Apple CarPlay, Android Auto, Sirius XM, and the great state of Michigan. This is Bloomberg Surveillance. Stay with us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. Investors kind of looking to comments from Fed Chair Jay Powell tomorrow. Data on the Fed's preferred price metric on Friday. Today, we also have a read on new home sales for August. That's about 45 minutes from now. This morning, the MBA said mortgage rates fell for an 8th week in a row, triggering a wave of refinancing. Now, since we're talking housing, shares of homebuilder KB Home down 5% after a miss on earnings and net orders in the third quarter. Let's get to futures. NASDAQ futures down about 0.1%, 20,145. Dow futures down 16 points at 42,581, and S&P futures down about a point at 5,790. We have the 2-year yield at 3.52%. That's down 1 basis point. The yield on the 10-year 3.76%, and that's up 2 basis points. Few companies making news. Got to start with Boeing. Striking workers say they're not interested in the company's sweetened 30% contract offer. Then you have Volkswagen and unions. They'll begin talks over cost cuts, and that includes plans to potentially close factories in Germany. And in other news, Uber partnering with Chinese autonomous car company WeRide. They're going to expand its robo-taxi offering to the UAE. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and David.
Lisa Mateo, thanks so much. Joining us now for Global Wall Street. We welcome all of you around the world, across the nation. Here, Michael Mauboussin. I'm going to frame this out. David, he's got a very important Morgan Stanley piece out for Counterpoint Global Insights on stock market concentration. But I think we need to know how we got here, David Gura, with Michael Mauboussin. Somewhere in the late 90s at Credit Suisse, they put out this literature that was 7, 8, 9 pages, and you'd swear because you had to read every word. And you go, who is this Mauboussin? I can't even pronounce his name. Who is this Mauboussin guy? And what began really culminating in the internet boom, the first boom of 2001-2, was the required theoretical read on Wall Street. He extended this from Credit Suisse to like Mason, now at Morgan Stanley. We're thrilled that Michael Mauboussin could join us for extended conversation today. Do your old essays still hold true today? Those seminal capital allocation essays that you wrote, I'm going to say it's 25 years ago. The math's still the same, right?
I think the math is the same. And, well, I guess I'll leave it to the readers to actually judge ultimately whether that's the case. But I'll say, Tom, just backing up a little bit, I was very fortunate to be able to be involved with the folks at the Santa Fe Institute, learning about a lot of these concepts like power laws and increasing returns. Right. Now those things are, network effects. These are all, it's kind of common language today. Right. But that was very novel, roughly 30 years ago. So I was able to be maybe a slightly bit ahead of trying to implement those ideas and thinking about it. And by the way, the internet boom was just like the classic. It was a canonical boom and bust, right? And you could see it unfold before your eyes. So you could actually write about it and say, like, we know that 90% of these companies are going to go away, but we're experimenting, right?
You nailed 8, 9, 10 essays in. I can't remember. And this is from electrical engineering folks. You don't go semi-log, you go log-log. And you end up with a hyperbola, which is that curvy thing you studied this, David, at school. You nailed that few would win. I believe Amazon was your model there. But on a log-log chart, a few winners would be there. You absolutely nailed that. Is that our future?
Well, the thing is that distribution of company sizes follows a power law, and I don't know that we know exactly why that's the case. So it was true then, it was true back in the 1950s, and I suspect there's no reason to believe it's not going to be true going forward. So the answer is yes. The challenge is figuring out precisely what you said, Tom, which is which companies can lie where on that power law distribution, right? And power law, by the way, power law it ends up being a straight line when you do it on a log, but it's not intuitive when you actually run through the numbers, because obviously a log is you're doubling or you're increasing the same percentage for each tick mark.
What Mauboussin is saying is not intuitive. Is I got a C, he got an A. That's what that means. I got to get one more question here because Gura's worried about the present tense. If that's the case, and if I go to Krugman, who's been very good about monopsonistic tendencies, is there an American capitalistic tendency where the few just get bigger and bigger, the exploitation theory?
Yeah, this is another really fascinating thing. If you look at the last 20 years in particular, what our numbers show, and we do a lot of work on returns on invested capital for businesses, what our numbers show is that the larger companies have distanced themselves from the smaller companies. So people talk a lot about large cap versus small cap, but the underlying economics for these big guys is actually quite good. And I'm sure we'll talk about stock market concentration, but this ties into that argument, which is the fundamentals seem to be the case. So how does that go on forever? I have no idea. I'm more observing than I'm predicting, but the last 20 years have been quite unusual in that specific context.
Well, let's move to the present tense, but I'll stick with learning from history as well. And I wonder, as we talk about your writing on the internet in the past, how much that is an analog to what we're seeing today. How much are you thinking about what happened then as you look at what's happening now with kind of the exuberance and excitement about artificial intelligence?
Right.
And the like?
I think that there's a model, and you go back to the railroads and canals. I mean, everyone, radio, we see the same pattern every single time. By the way, this is well documented by an economist named Stephen Klepper, formerly at Carnegie Mellon University. And basically the pattern is this. You have a huge number of companies trying out a lot of stuff. Right. Most of those companies are going to fail, but you can think about each of them as options. Eventually the market, in quotation marks, selects the technology that's going to win, and then everything else they consolidate or go out of business, whatever it is. So you have this experimentation phase, and then you figure it out, and then you have this sort of waning of all the losers. Yeah, we going every time you see a new technology come along. And by the way, it's funny. I was with a client. This is like 2001, and the guy says, "Oh, we just lived through the dot-com boom and bust. Do you think we've wisened up and that we'll never do this again?" I was like, zero probability of that. No, maybe not zero, but basically close to zero. I mean, this is how it works. And by the way, as a fascinating side note, scientists have studied, this is how our brains, actually how we develop our brains. Synaptic connections in our brains do the same thing. From the time you're born to the time you're 3, you have an explosion of synaptic connections, trying all sorts. If you've ever been around a 3-year-old, we all have been.
Yes.
They're very inefficient little things, but they take in everything, right? But then you prune away the stuff that doesn't matter, and you keep the stuff that's good, and you go from there.
David, get stock market concentration in here.
I remember talking with Michael Hartnett of Bank of America a few years back, he who coined the term Magnificent Seven, and we talked an awful lot about the need for the market to broaden out, the concerns that we've heard about concentration. We can stay in the present tense, but pull back as much as you'd like here. How much have we seen that happen? How vital is it that we have that kind of moving back from just a handful of names and companies?
I just don't know how to answer this question. I was like I was really reticent to wade into this topic at all. But I was like, there are a couple things that seem to be missing here. Number one is just going back further in history, right? So we went back to 1950. The concentration we see today is clearly precedent. It was the 1960s. And by the way, if you go back to the 1930s, that was basically that was the standard. But number two is he asked a basic question: is, if you had a clean sheet of paper and you knew nothing about this, how would you figure out what concentration should be? The reason it's so disconcerting is because we've gone up a lot in the last decade. But what should it be? And so we said, well, one way to think about that is the underlying economic profits, right? Economic profits are return on capital times the amount of capital you have. And it turns out, for example, at the year end of 2023, top 10 companies were 27% of the market cap in the United States, and they were 69% of the economic profit. If you go back even a decade, they're typically in the high teens in terms of percentage, but they're in the mid-40s in terms of economic profit. So not to say that anything is, in quotes, justified or not justified. So widening out the market, you say, like, there should be an economic justification for it, not just this is how it used to be, should go back to being what it used to be. So
we're going to come back. Michael Mauboussin with us from Morgan Stanley with Counterpoint, and it's just a huge conversation. We're going to talk about an exceptionally important essay in Barron's this week from Harvey Shapiro, and also about the heart and soul of his work, which is free cash flow and how to judge the value of a company, not only when you're an investor, but critically as a corporate officer looking at M&A and such. It's a very rich conversation. We'll do this here as we get the market open. Futures flat, boring. Waiting to hear from Michael Mauboussin. That's what they're doing. -1, VIX 15.60. Maubussin's going to walk out of the studio if I quote the VIX. I know that. The real yield, that's what I look at. The 10-year real yield, 1.58%. Of note here is renminbi. Looking over China at their ballet of monetary stimulus, 703 has become 7.02 handle on renminbi. I don't know what the emotion is of a 6.99, but it's tangible. China, when the facts change, they change, and they are doing monetary stimulus, at least many, including Virginie Maissonueve, suggesting fiscal stimulus on the way. Across the nation on radio, on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, David Gura with your opening bell report. Now, it's been a wait-and-see approach this morning. Traders kind of waiting to see what Fed Chair Jay Powell will say tomorrow. Also, what the PCE price index will reveal Friday. About a half hour from now, we'll get a read on new home sales for August. Right now, we are off and running, so let's see how things get started midweek trading. We'll start with the S&P 500. Right now, little change, but we're at 5,733. We have the Dow up about 0.1%, 79 points at 42,284. The NASDAQ down about 0.1% at 18,051. We'll go to the 2-year yield, 3.53%. That's little change. The yield on the 10-year, 3.76%, and that's up 3 basis points. Let's check with commodities. We have spot gold higher, $2,663 an ounce. We go to oil. Brent crude lower, $74 a barrel. WTI crude, $70 a barrel. Quick check of currencies. We have the dollar weaker, Japanese yen weaker, euro stronger, British pound weaker. We have Bitcoin down about 1% at around 63,000. That is your Bloomberg opening bell report. Tom and David.
Lisa, thanks so much. Get that up right now, Ari, if we can. Ursula von der Leyen, the former German defense minister, one of my favorite people in the Davos ballet, now at Brussels, of course, with her leadership there, opening the bell at that capitalist evil, the New York Stock Exchange, with EU flags all around. I just think that is just the greatest branding of this UN week. I'm tipping my Uber, Lyft, and taxi cab drivers extra. They are getting killed.
Well, they're probably getting some surge
2 days.
pricing out of you as well, and I suspect that Ms. von der Leyen will have an easier time getting back up here than you had yesterday after that conference.
Yeah, well, she'll do better with
clear the roads.
Clear the road out. I'm going to read this verbatim. I put it out on Twitter. This is Harvey D. Shapiro in Barron's with research from Arizona State's Henrik Bessembinder. Just 86 stocks accounted for half of the total stock market wealth creation over 90 years. Less than half of the stocks in the universe generated any returns. Only 42% earned more than risk-free treasuries. Less than 4% of thousands and thousands of stocks in this universe accounted for virtually all of market gains. Harvey Shapiro, tour de force in Barron's, and the guy to talk to about it, Michael Mauboussin, with us right now. Modern portfolio theory, and Peter Lynch called it diversification. Is it our evil?
I mean, this is the most challenging thing when you think about active management, because let's say, so just to play back, like you said, it's a handful of companies that generate most of the shareholder wealth over long periods of time. Let's say you're a portfolio manager and you're smart enough to have identified one of these and put it in your portfolio. Let's say you bought Apple 15 years ago. Awesome. What happens is it becomes so big in your portfolio that you blow through all of your diversification requirements.
Will Danoff's living this at Fidelity.
Will Danoff, I mean, so anybody that's big like that. So it's a funny thing that on the one hand, you see the numbers and you know that. And on the other hand, it's very difficult to actually take advantage of it. And by the way, for your own personal account, people can do this, right? Even Berkshire Hathaway, I know they sold back their Apple stake, but a couple quarters ago, it was 50% of their public equity portfolio. You can't run a fund with 50% in the largest company in the world, most liquid company in the world, right? On a viable business basis. So it's a very interesting contrast. But the point being, the fundamental point is this skewness, and by the way, it's not just the United States. You go around the world. Bessembinder did a paper around the world. Bessembinder did a world in developed and developing markets. Bessembinder did this work with some colleagues around the world. Same exact pattern. And by the way, we don't know exactly again why this pattern exists, but that skewness shows up. That extreme skewness shows up over time everywhere.
I'm curious just about the role of active management today in light of what you're saying. So for the novice or the naive, why is it still appealing today, and to whom is it an attractive option?
Right. Well, first of all, I mean, active management is never going to go away, nor can it go away, because it does two things that are vital. And by the way, these are very important positive externalities for the world. Number one is liquidity. Mm-hmm. People forget about liquidity. It rears its head when we don't want to see it. And then second is price discovery. So someone's got to make the trains run on time and deliver the mail, making price efficient. So indexers are free riders. Jack Bogle, by the way, God bless him, would completely agree with this. They are all just free riders, and not everybody can be a free rider, obviously, in some sort of a system. Right. So that's number one. Now, number two, just David, to your point, why this has been so difficult is the average mutual fund manager who competes with the S&P 500 as his or her benchmark has an average size of their portfolio is smaller than the market cap of the S&P 500, right? So here's the logic is when large caps rip, which is what's happened in the last decade.
We've seen it, yeah.
Active really struggles, right? Because you're just not exposed. Now, by contrast, when small cap does well relative to large cap, active does really well. So that would be another thing to bear in mind. If you say, well, I think this concentration thing is going to go away, the small caps are going to do better, we're going to get more balanced market, that's actually as good a backdrop as conceivable for active management. And we have all the data in the report to sort of back up that assertion.
Michael Mauboussin on private equity. I look at the new credit and equity, the illiquidity there, the lockups. It's like VC redux once over. How's this tragedy going to end?
I like the in the question.
Based on the question, I give my opinion, but.
No, I don't know. I mean, I think that, we wrote a huge piece called Public to Private Equity in the United States, a long-term look. We looked at took a 50-year look at public equities. Obviously the story there is there are fewer public companies around. They're all on average larger. So why do we have 60% of the companies we did in 1996? Interesting question. We looked at the rise of private equity and then the rise of venture capital and how this happened. Now, look, I think that we just came through a period of very low interest rates. And if you're running money and you have liabilities to satisfy, you needed to go out on the risk spectrum. And venture does it through speculative companies or young companies. Buyouts do it through leverage. We've come through that phase and that's done, right? So that's an interesting thing is like, what do you need to do to satisfy your liabilities? And then all these things, the problems, as you know, anytime assets flow to a certain asset class, it always becomes more challenging to deliver excess returns. And so you follow the flows to some degree. Now, look, clearly in venture, clearly in buyouts, there are niches, there are spots, there are people that will navigate effectively. So just as I don't want to say the whole thing is challenging, but by the same token, it's a story that people now understand.
Tom has done such a wonderful job of framing who you are and what you've done, and I'd love to ask you sort of what animates you or gets you thinking about one issue or another in particular. How do you approach your research? Is it what provides the flash of inspiration?
David, it builds on my wealth of ignorance. So basically, there's a puzzle out there. There's something I'm curious about. I don't understand, and even things like active to passive. We talked about public to private or stock market concentration. These are things I'm like I don't really want to get involved with them because I know they're big controversies.
Fraught territory.
But they're fraught territory. But by the same token, I'm like I'm not sure people are getting down to the first principles, the basics of all these kinds of things. So I think that's usually what I've done. And then I think a lot about the investment process, right? I teach at Columbia Business School. Do
you get along with Abby Joseph Cohen when she says she's darkened the door? Is it,
Yeah, I mean, she's great. I mean, she's great. We actually have a podcast up there, and we had Abby on there, and she was great. And so, although she's famous, so like it's a whole different level. But the point is that investment. So if you say like from the beginning of identifying attractive investment opportunities to building portfolios, what's the process? Every part of that piece to me is fascinating. Interesting.
Mike, here's the heart. We're going to have to cut this off pretty soon. Michael Barr's demanding more Tigers coverage. Michael Mauboussin.
We have to oblige.
I'm going to give you a nightmare. Okay, I don't care how smart you are, how smart I am. Trust me, folks. There's all sorts of company names you can whisper in my ear over money lost. How do you avoid an Intel?
Right. Well, I think this is really hard. And Intel is a case study. The framework, and we're talking about how do you think about competitive advantage of businesses? The framework is typically is if a company's making a lot of money doing something, it's very difficult for them to do other stuff.
It's Clay Christensen 101.
It's Clay Christensen 101 disruptive innovation work. And so that's the thing just to be very mindful of. And I don't know if it's apocryphal, but apparently Apple went to Intel early on and said, we've got this thing in the works called this new phone. Like, we'd love you guys to build the chips. And they're like, yeah, I don't know. Like, that market doesn't seem that big. It doesn't seem that profitable. And by the way, this x86 thing is killing it for us, right? So you get stuff like that comes along. And by the way, Andy Grove was obviously a huge Christensen fan and actually pivoted the company based on Christensen's work. So that would probably be the thing to say is to take a look and be careful about that.
I got to be 30 seconds. The new Intelligent Investor is coming out. I've promised myself I'll read it like I read it, when I couldn't shave. I mean, what's the wisdom from Ben Graham and the crew from years ago that's still true today?
Gosh, and by the way, Jason Zweig's in such capable hands, such a great guy to do that. A few things. I think the two ideas I think most important from Ben Graham. By the way, Ben Graham understood behavioral finance before all this stuff was written down in a formal fashion. Number one is the Mr. Market metaphor, which is this idea that we should always understand that markets go from overheated to under enthusiastic, and so and it's often fair, but you get these extremes, and that basic framework I think is really powerful. And the other one, Tom, is margin of safety, right? Which is if you're long something, always buy something with a lot of accommodation for you to be wrong or for things to break in a way that are not optimal, but margin of safety. Those two fundamental ideas, I think, will always be around as long as we're doing this.
Michael Mauboussin, Consilient Research, Morgan Stanley. Thank you so much, folks. Look out on Twitter and LinkedIn. I'm slowly going through the Mauboussin cannon, as Harold Bloom would call it, from
Harold
back in the
Bloom
90s.
would call
We'll
it.
continue to inflict that upon you over the weekend. Red and green on the screen on NASDAQ, slightly elevated. Mauboussin lifting the market. With our news in New York City, Michael Barr.
Thank you very much, Tom. David, Lisa, Hezbollah hurled dozens of projectiles into Israel, including a missile aimed at Tel Aviv that was the militant group's deepest strike yet. The missile firing early today marked a further escalation after Israeli strikes on Lebanon killed hundreds of people. The Israeli military said it intercepted the surface-to-surface missile, which set off air raid sirens in Tel Aviv and across central Israel. There were no reports of casualties or damage. Secretary of State Antony Blinken says diplomacy is still the best solution, not more violence.
If there were a full-scale war, and we've managed to avert one till now, we've had a number of times since October 7th where we seem to be on the verge of it. Deterrence, diplomacy by the United States prevented that from happening. But if there were to be a full-scale war, that wouldn't solve the problem. It wouldn't get people back to their homes.
Secretary Blinken spoke to ABC. Florida is under a hurricane warning as the state and Mexico brace for Helene. Bloomberg meteorologist Rob Carolyn has more on the tropical storm that's getting stronger.
Tropical storm Helene is now about 60 miles east-northeast of Cozumel, Mexico, moving northwesterly at 9 miles an hour. Top winds are now 70 miles an hour. Helene is expected to become a hurricane later today. Hurricane warnings are in effect for the Big Bend area of Florida, much of the rest of Florida under tropical storm and hurricane warnings. And those tropical storm warnings extend up the coast as far north as South Carolina. It's going to become a very large, powerful hurricane. It'll strike the Big Bend area tomorrow, but much of the Florida Peninsula and Panhandle will see winds in excess of 60 miles an hour, and also looks like some very heavy rain is likely inland over the southeastern United States as far north as the southern Appalachians into the weekend. I'm Rob Carolyn, Bloomberg Radio.
Thank you very much, Rob. The two presidential candidates are set to deliver dueling speeches today. They reflect how they're honing their economic messages for voters in key swing states. Vice President Kamala Harris is set to speak in Pennsylvania. Former President Donald Trump will be appearing in Mint Hill, North Carolina. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, David, Lisa.
And Michael Barr, thanks so much. David Gura, what did you learn from Michael Mauboussin? That was a tour de force.
Fascinating. I mean,
yeah.
Pass along those notes as you go through the canon. I'm
I
eager to hear more.
I sit there and I reread them with love and affection. We all read them, in the 90s, early 2000s. And then I'll take one quote, which I think is germane to today,
Yep.
and I'll put it out on Twitter, LinkedIn. I can't say enough about the distribution here, and Mr. Gura is very good at this. The other day out on Twitter or LinkedIn, you put out Lester Flatt's Martin guitar.
Yes, for sale, D18.
They're giving it away.
Starting bid $50,000.
$50,000
I
for
haven't
Lester
checked back
Flatt's
to see how much that's going to get up to.
D18. That's something.
Yeah,
It's
but you like LinkedIn. You're using it more. I'm trying to get on there.
LinkedIn is dramatically improved. Shout out to Microsoft. I left it years ago. Good morning, Dan, their editor-in-chief, who really helped me a lot years ago. And LinkedIn was a little shaky. That is done. It is gone. Shanali Basak is the one that got me back on LinkedIn.
Writing regularly for it. I get her newsletters. And yes, I've been impressed as well. I didn't put the D18 up on that site, but maybe I should. Will I get a response? LinkedIn response to the Martin guitar?
I'll tell you a Martin story here in the next block. From New York City, David Gura and Tom Keene. Stay with us. It is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in stocks. Investors kind of looking for clues on the economy. Also, as China's latest stimulus really failed to ripple beyond Asian markets. Right now, we'll get to stocks. So we have NASDAQ, little change, but we have record territory. So I want to point these out at 18,083. We have the Dow down about 13 points at 42,195. The S&P 500 up about 3 points at 5,736. We have the two-year yield, 3.54%. That's little change. The yield on the 10-year, 3.77%, and that's up 3 basis points. Now, we mentioned China stimulus, so let's check in with those U.S.-listed Chinese stocks, which were higher yesterday, but today we're seeing a difference. We have JD.com down 3%, Alibaba down about 2%. Few companies making news. FanDuel's Flutter Entertainment up about 8%. It approved an up to $5 billion share buyback over the next 3 to 4 years. And Google, they're accusing Microsoft of abusing its dominance in the cloud market. They filed a formal complaint to the EU's antitrust watchdog. And finally, checking in with NVIDIA shares, they're up about 2%. Their gains really helped lift the markets yesterday. And after the close, we're going to hear from Micron. That is a Bloomberg Business Flash. Tom and David.
Thanks so much, Lisa. Greatly appreciate it. Micron, Idaho. You know, in the book, my book of the summer, Chip War. Fabulous book about semiconductors and, the whole thing. Micron plays a huge part. We just sort of, it's like Micron, MU, you sort of ignore it.
The lesser known
answer
chip
is,
manufacturer.
It's like Boeing. It's like a U.S. thing and really important. Sometimes, David, I'm wrong. Like, I can barely keep track of who's who. I'm calling Lisa Karen. It's John Tucker.
John Tucker, yes.
Okay. Hasim, I figured out. Hasim Najee joins us right now from California. And we had him in, and I'm like, yeah, commercial real estate, some guy from California. I'm like, yeah, okay, great. And the response was ginormous. They're like, get this guy back on again, because it's, ex-Grubb and Ellis and iconic at Marcus and Millichap. When does commercial real estate just die? I mean, how far through, on an innings basis, looking at the Los Angeles Dodgers, how far through the baseball game are we of a commercial real estate collapse?
There is no collapse.
There's no collapse.
The importance of commercial real estate in housing the United States economy is never going to go away. You have apartment rentals for 37 million U.S. residents that can't afford to buy a home. You have warehouses that is the heartbeat of e-commerce and trade for this country. You have office space that still occupies a lot of professional service firms. They can't get their workers back in the office to the degree that they should. They're struggling. And then you have consumers that are buying retail goods at record levels.
You sound like you're working for the Chamber of Commerce. At the margin, it's a train wreck. When does a train wreck end? When do we, on a Hayekian basis, clear the market?
I have a research background, so yes, there is a sales component to what our company does as an advisory firm, but my job and our job collectively is to bring the facts to the table. There is really no threat to the industry other than a lot of distressed assets that were over-leveraged in the last 3 years, a lot of maturing loans that were aggressively underwritten that are having trouble, and those cannot be overlooked or underestimated. But I don't believe they're going to create a contingent to bring down the banking system.
I've heard this, but when does this workout end? I get the healthy workout. Somebody takes a loss. Somebody picks it up cheap, like Marcus and Millichap. I get that. But when is this trauma over?
It's an ongoing process because time never stops. You have cycles that ends and cycles that start.
See some California. It's like flowers in here. Time never stops.
I represent the United States and Canada. Our firm is the largest investment brokerage firm specializing in investment brokerage and finance in North America. And the perspective is really universal. It's not unique to California. California does have a lot of policy issues. They have some corporate exodus. And there's no doubt that state in particular has some unique issues that we're facing in a market that's always been leading. And that goes to show you that the Fed's 50 basis point move was a strong message that the cycle have shifted. A lot of people that were on the sideline waiting for that message are now much more optimistic. We have record capital on the sideline waiting to buy assets.
Right.
And the degree, I think your concern about the distress becoming a contagion is warranted if you just look at the headlines. But if you dig deep under the numbers, there is a portion of the market something to the effect of 4% of all bank debts in the U.S. are allocated to office buildings, and not every office building is underperforming. So the degree
say that again. 4%
of the
your
total debt held by banks, approximately 4%, 3.8%, is allocated to office buildings.
David, I would have never guessed that. I would have been way gloomier.
As you excuse my catastrophist friend over here to my left, I did see a piece on Bloomberg. Earlier this year, investors agreed to buy a New York City office building at 67% less than its 2018 purchase price. The former Chicago headquarters of CBOE Global Markets sold this summer for about half of its pre-pandemic value. How much of that is emblematic of what we're seeing, that kind of reset evaluation? Are these extreme examples, or is this something that's playing out across the country?
Those unique transactions are extreme examples. There is no question that the pricing of commercial real estate has gone through a reset. We're seeing prices that are below peak by 20 to 30% across the board. And that makes sense because interest rates were near zero, and now they're at 5% on the federal funds rate coming in, thankfully, and the 10-year treasuries come in quite a bit. But when you have that kind of a reset on interest rates, there's going to be impact on values.
So what happened last week, 1 week ago from today? Tom's on air, breaking the Fed interest rate decision. Did a dam break for you? Sort of what changed in the world of commercial real estate when the Fed began this rate cutting cycle?
We saw the bottom coming in March or April of this year because the market always moves ahead of the actual event. The 10-year treasury came in well before the Fed move in anticipation. That already began to kind of increase interest by buyers. We're seeing the number of tours on the listings that we take out more than triple from a year ago. We're seeing the number of offers on properties that were taken out to market more than double from a year ago. So buyers are back in the market, but they're not going to overpay. And what's helping the market now, besides the Fed, is much more realistic sellers that were holding out, hoping to get yesterday's pricing. And now reality basically has recalibrated valuations in multifamily, in shopping centers, in self-storage, in warehouses. So it's really an industry-wide impact on values, not unique to those extreme situations of a fire sale, of a truly distressed, obsolete office building.
You're out Highway 101, popping into LA, 25, 30 traffic jam miles. Are you guys going to pull off the Olympics? What do you think?
We'll figure it out. Americans always do. Americans always do.
Well, who's your Peter Ueberroth here? Who's the person that's going to make this thing work? I'm sorry, I can't remember the guy that made the London Olympics work. He was Chancellor of the Exchequer right now. Who's the person we should focus on who's going to get this done?
It's an unnamed hero who will show up at some point. Okay. I don't know if there's one
The lead singer,
figure.
Red Hot Chili Peppers.
The good news is that there are committees that have a lot of business people on them, so we can hopefully count on them to bring some logic to it.
I got 1 minute. I'm hugely negative on the naysayers of Los Angeles. The world's going to die. It's going to roll up. California's going to be no more. Tell me about the immediate vibrancy of Los Angeles right now.
There is vibrancy from offshore. There is vibrancy from foreign immigration. I'm not talking about illegal. I'm talking about legal. And there's vibrancy around the fact that the state continues to attract intellectual capital and entertainment and the top-notch tech. The problem is the anti-business environment throughout the state that has plagued solution finding between public and private sector issues. We need to figure that out if California is going to become a leading state again.
This has been fabulous. Thank you. Thank you.
Thanks for having me on.
Good weather.
I love the debate. Let's do it again.
No, it's great. It's even as he's with us here with Marcus and Milchep. Can't say enough about the response we get when he's on about 4% of debt is office buildings. I didn't know that.
3.8.
It's like crisis over. Yeah. Every building I'm looking at out here is underwater outside our world headquarters. Anyways, that was fabulous. What a great show. Tomorrow, I can let the cat out of the bag. We had Michael Mauboussin today. Mr. Taleb is scheduled to show up. He of the Black Swan, which will be great. We'll have an extended conversation with Nassim Taleb.
Did you book all this in my honor?
No, they don't. My people did it. Okay. It's amazing. We kept the interns over.
Oh,
they're
very
still here. It's really working out. Red and green on the screen. Stay with us on Bloomberg Radio. He is from Canada. Good morning.